Variant fast becoming dominant from South Africa to Germany. Taper talk. The Fed's Christopher Waller says the strength of the US economy warrants scaling back asset purchases sooner than expected. We'll bring you more of that exclusive conversation. And agile aid. The UK revamps its state subsidies system for the post-Brexit age, promising to make quicker decisions than when Britain was in the EU. Welcome back to the second hour of the European Market Open, everybody. Let's have a look at where we are on futures markets. What do they tell us about the start of trade? Just 15 seconds to go until the start of that cash equities trade. And we are looking for a little negativity, perhaps, at the start of our trading day. Stocks 50 futures point down by around 0.25%. US futures, though, I've mentioned a few times, flat to positive. The emphasis on the flat, so they do really look fairly unmoved in the overnight session. And there is a sense that even though we are near all-time highs, we saw new all-time highs on some of these US equity markets yesterday. We're still slightly in a drift, aren't we, as we head towards the payrolls number due on Friday. So we'll wait for that. And of course, the extended long weekend over in the United States, maybe that plus the football, plus the tennis, maybe all of that takes some liquidity out of European markets or US markets. So we'll keep all of that in mind as we look at these European equity markets then, as anticipated, opening just a little weaker, although the FTSE 100 trying its best to keep its head above water. The CAC 40 down 0.1%, the IBEX down by 0.4%. So a little bit more downside coming through in the Spanish market. Overall, then, I guess we'll call this a flat start for European equity markets this morning. Now, the Fed's newest voting member, Christopher Waller, says it's time to think about pulling back some stimulus and hasn't ruled out a rate hike next year.
It would have to come back very quick. The unemployment rate would have to drop fairly substantially, or inflation would have to really continue at a very high rate before we would, take seriously a rate hike in 2022, but I'm not ruling it out.
That was Christopher Waller then speaking with his view on where interest rates go in the United States. Gregory Perdon, our Arbuthnot Latham co-CIO, joins us this morning. Gregory, nice to speak to you once again. So there does seem to be a bit of a divided market, some saying the Fed could hike or will hike as early as 2022, which is only 6 months away now, the start of it. Others saying, no, that's way too early, it's going to be the following year. What's your expectation? Of course, there's the taper conversation to get to before that, but in terms of rate hikes, what is it you're expecting?
Good morning, Anna. So in terms of expectations, I think we'd be largely in the main. Our expectations would be towards 2023 as opposed to 2022. In terms of Walker's comments, probably one of the more interesting snippets that came from that, which is in line with a conversation I actually had with a friend of mine that used to work at the BOE, is all about the mortgage market and the U.S. housing market. As he said, the U.S. housing market is absolutely on fire. And so what might interpret that as some sort of hint that in terms of tapering, MBS might be the first to go instead of Treasury. So that would be our first take, Anna.
Would be
yes, so that's in terms of the tapering conversation. And I wonder if we're going to see, Gregory, I mentioned this to our last guest, whether it's possible to have a global conversation around housing, because, of course, it operates with so many very local factors, local regulations and local taxation regimes. But we do seem to have seen, as you say, people talking about that market on fire in the US, others talking about the strength in the UK housing market. And it is a global theme. We've talked about it in other jurisdictions as well on this programme. Our colleague Enda Curran writing a great piece on the global housing market. Will we see see regulators then taking some action to try and diffuse bubbles, if they perceive them, in housing markets?
I mean, Anna, the conversation is so complex. Just some highlights to contribute to the debate. One of the factors that we're going to be confronted with is the fact that in capital market cities around the world, whether it's Rome, Paris, London, the house prices have really risen substantially, and that could potentially contribute to the inability for everyday homeowners to actually purchase homes. So the question about inequality has to be factored into that conversation. Housing is a long duration asset, so of course, with interest rates being pressed down, house prices have risen almost like a 30-year bond. It's an extremely complicated conversation. It's something that we're actually looking at in some of our research initiatives when we're trying to comp quantitative easing and monetary policy with the prospect for inequality. Bottom line, in terms of the punchline, definitely there is starting to be some overvaluedness in capital market cities, and we're gonna struggle with that as investors, as regulators. How do you actually enter into those markets and put caps on house prices? I mean, the reality is that probably monetary policy and the reversal of quantitative easing may do a lot of that heavy lifting for us as interest rates in turn rise and could put a cap on housing prices in the future.
Just as post financial crisis, we were talking about how some of the policy that was introduced might have benefited those who had assets already rather than benefiting everybody equally. So that conversation will run on run. We had a conversation also with the Gramercy Fund Management CIO, and he was talking about fears about the wall of liquidity that's come into markets in recent months, and some of it may have gone into housing markets, of course, but some of it's gone into very liquid assets, and he was very concerned about some of those very liquid assets. Do you get concerned, Gregory, about when we turn the corner on the amount of liquidity that is sloshing around global markets right now, and where that starts to throw up problems first?
I mean, I don't necessarily not share that concern. I do think there's quite a lot of cash on the sidelines. Saving rates, are very high. There is the ability for central banks and fiscal authorities to act like they did during the Corona crisis. So I'm not necessarily too concerned. I do think there's some more structural concerns, like I alluded to earlier, in relation to inequality, in relation to housing markets, which I think will kind of tip the card and potentially force the Fed to start unwinding MBS purchases. And it's for that one of the reasons why we're actually considering starting to reduce some of the mortgage exposure we have in some of our unconstrained portfolios that we manage on a discretionary basis at the firm.
Gregory, thanks very much. Stay with us. Gregory Purdon, Arbuthnot Latham's co-CIO, stays with us here on the European Market Open. Let's just get to some M&A news for you. We're actually going to be talking about a lot of M&A later on in the programme, but we've got a move in Grand Vision's share price that I need to bring you this morning. Grand Vision jumping, I'm reading 14%, there we go, 14% to the upside. EssilorLuxottica is proceeding with the deal. There had been questions raised about whether this eyewear purchase was going to take place, whether EssilorLuxottica was going to go ahead with the deal for Grand Vision, and it seems as if they are, and so as a result of that, we're seeing substantial gains in the Grand Vision share price. Coming up then on this programme, it is the last day of the first half, believe it or not. We look ahead to what to expect for the next 6 months of the year. That's as markets close out a positive first 2 quarters, with investors shrugging off inflation worries. This is Bloomberg.
ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
If you own something good, hold it for a long period of time. So to me, find those right neighborhoods to invest in, deploy your capital, and then be patient.
This rotation be really fueled by both the virus as well as inflationary concerns. And, these big companies with secular earnings momentum are the ones that have been leading the market.
The physical demand is being pulled from the entire global economy where interest rates remain very cheap, even if we're past the maximum Fed accommodation, right, where we've seen increases in a couple of interest rates, like the interest and excess reserves, very small, very modest, but expectations of more rate hikes ahead.
As we look forward into the second half of the year, given how oversold the tech sector was, and given how on a valuation basis relative to value sector has really underperformed, we think that tech is ripe to buy.
Some of our guests there on Bloomberg TV discussing the end of the second quarter in markets and the outlook for the rest of the year. 10 minutes into our European trading session, this is the picture for you. Pretty flat, really, across European equity markets. Very little divergence. Not much of a narrative to give you when it comes to those particular moves. Flat on the Stocks Europe 600. Let's take a look at our individual movers, though, because there we do have some interesting narratives to go through. Grand Vision, we mentioned this just ahead of the break, and is still a very strong performer today, up by 14%. This on the back of that bid activity that now looks to still be in place. Luxottica Essilor-Luxottica now saying that they will go ahead with that deal. So we'll keep an eye on that one. We're also watching other deals, and in particular over in the French and global utility space. The Suez board backs the Veolia takeover and subsequent asset sales. So we've got some further moves there on the Veolia share price. Veolia will sell back about 40% of Suez to a Franco-US group. That's part of the detail of the deal that we're tracking this morning. And let's also talk about Dixon's Carphone, this mobile phone retailer here in the UK. That stock rising in this morning's trading session. You can see it's up by just 1%. It rose by more than 3% at the start of the trading day. Full year results coming through. It seems that the dividend numbers, the growth prospects, all of that pleasing to the market, the company saying strong trading in all markets in the full year is their expectation. So European economies are starting a robust recovery on the back of an accelerating vaccination campaign, with coronavirus infections dropping and booming demand triggering a spike in prices. Pressure is building perhaps on in some quarters for the ECB to consider exiting emergency stimulus and for governments to consider how to reduce debt burdens. ECB President Christine Lagarde says that need to include a green capital market union, or rather she references the need to include that in the recovery plans. She made her comments at the Brussels Economic Forum.
We need to add another element to our post-pandemic recovery plan, which is to match Next Generation EU with what I have coined a green capital market union, a green CMU, a truly European capital market that focuses on green investments and that transcends national borders.
Christine Lagarde there of the ECB. Gregory Pardon of Arbuthnot Latham, where his co-CIO is still with us. Gregory, we're listening there to Christine Lagarde talking about what is needed in the European recovery. One thing that is very much underway is the Next Generation EU capital raising. We've seen that the European Commission has come to the market raising a lot of euros in the last few weeks or so. I think just month to date, 35 billion euros. They could have raised a lot more, though. This has been very well oversubscribed, demand holding up pretty strongly. Are you interested in that kind of sovereign debt at this point?
I mean, generally speaking, our posture from our discretionary portfolio perspective is we're very much underweight sovereign debt. having said that, we don't have a structural requirement to own it. Unlike certain, other style of investors and other pocket of real money investor. In terms of EU next gen, I think my caution to the market is I wouldn't estimate the level of resolve that the EU and the ECB have in terms of getting these structural changes to take place, getting this capital to work. I realize, and I'm the first to criticize in terms of having shovel-ready projects. That's definitely on our radar screen. But I wouldn't be too fast to criticize. Certainly not accusing you of this, but I wouldn't be too fast to criticize the EU and the ECB in terms of the level of resolve they have in terms of actually making these things happen, if that makes sense.
Okay, yeah, and thinking about shovel-ready projects, Gregory, what is the best way to play infrastructure themes? We hear a lot of talk about this in the United States, of course, and the next generation EU comes with a lot of infrastructure improvements perhaps behind that or included in that. Where are the best opportunities for playing this then, when you look at the various players?
I'll tell you something quite interesting. We are bullish on commodities. We are optimistic on the whole infrastructure, narrative. One thing that we've done recently in some of our portfolios, in a small way, almost dipping our toe in the water, is actually investing in carbon credits. Because that is a way of expressing, the decarbonization theme, the net zero theme in the decades to come, and ultimately, large emitters of carbon are going to have to find other ways to, accommodate the fact that their ecological footprint is quite significant, and that's one way a financial investor such as us can potentially, play that theme. So that's one area that we've just very modestly begun to play, and I see that's definitely something that's going to, emerge as a larger and more recognized asset class in the next couple of years.
Yeah, and we've certainly seen an increase in the carbon price, haven't we? The European, just looking at that now, it certainly has been moving to the upside in 2020, 2021, Gregory. Tell me how that sits alongside exposure that you have in some of your books, I think, to oil equities. Do these two work in the opposite direction, or are oil majors now sufficiently on board with decarbonisation that maybe they don't move quite in opposite directions? I mean, what is the point? What's the argument for having both exposure to oil majors and carbon prices?
It's a conundrum. I appreciate that. I mean, ultimately, as a society, we're very good at designing and finding new energy sources, and rather than that actually retiring historic energy sources, we just add it as a new resource. So it's not like coal is going away tomorrow. It's still going to exist there, but ultimately, our hope is that wind takes up some of that slack. The reality is that with the trifecta of support across monetary, fiscal, and the vaccination rollouts, mobility is increasing, more things are moving around, more people are going to be moving around, and the reality is that the demand for oil is only going to increase going forward. I don't know if we're going to see $100 oil. If I had to take a position on that, I would say there is a high probability that we see that in the coming year or two. I know Bank of America has come out with a $100 oil call, and I suspect they're probably right. And we have direct satellite positions in most of our discretionary portfolios in energy equities, which is really a reflection of our view that we do think the vaccination strategy is going to work, and that will increase mobility, and that will reflect well, and the price of oil and energy stocks should benefit and continue to benefit from that trend.
Right, yeah. What happens to oil prices during the transition? Certainly one we will be watching very closely. Gregory, thanks very much. Really good to speak to you. Gregory Purdon, Arbuthnot Latham co-CIO. Gregory will be continuing his conversation with us on Bloomberg Radio. That's at 9 a.m. UK time. Let's get a Bloomberg Business Flash. The top corporate stories we're covering this morning then, here with Laura.
Thanks, Anna. The board of Suez has recommended a takeover by Veolia, paving the way for the creation of a global water and waste giant. To resolve competition concerns, Veolia will sell about 40% of acquired assets to a Franco-US group of investors led by Meridiam and Global Infrastructure Partners. Moderna shares rose to an all-time high in New York after its vaccine was found to produce protective antibodies against the Delta strain. Moderna says the lab-based studies show that its shot should protect against newly detected COVID variants. Shares also got a boost after India approved imports of the vaccine for restricted emergency use. And we will be speaking to the Moderna co-founder Noubar Afeyan at 10:30 a.m. London time on Bloomberg Surveillance Early Edition. Elon Musk's satellite network, Starlink, is on track to beam broadband internet everywhere in the world, except for the polar regions, by August. Musk says SpaceX has launched more than 1,500 satellites so far and is already operational in about a dozen countries. He sees the company having 500,000 users within 12 months and says Starlink will list publicly once cash flow becomes more predictable. That's the Bloomberg Business Flash. Anna.
Laura, thanks very much. Laura writes here in London. Coming up on this programme, Agile Aid. The UK revamps its state subsidies system for the post-Brexit age, but will it be better than when Britain was in the EU? That's the aim. What will the EU make of it? How controversial will it be? We'll get to that conversation next. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Welcome back to the European market open. 22 minutes into our trading session. Things deteriorating just a little, perhaps, down by 1/8% or so on European equity markets. US futures, incidentally, still flat to positive. Now, the British government has revealed its post-Brexit system for overseeing subsidies to companies. It's promising to make quicker decisions than when the country was in the European Union. Subsidies will be allowed if they follow certain principles, like benefiting local communities and being good value for the taxpayer. Joining us now for more is Therese Raphael from Bloomberg Opinion. Therese, I'm not sure what you make of this new subsidy plan. It strikes me as interesting to hear what the EU makes of this subsidy plan as well, given that there were certain commitments made when the Brexit deal was signed by the UK government and the EU about how this kind of aid would evolve into the future. What do you make of it?
Well, I think the EU is going to regard it, with a degree of caution. They want to see how it's implemented, and they want to ensure that it doesn't fall afoul of what was agreed in terms of the level playing field. Now, the UK is saying that the big difference here will be that it will be less bureaucratic, and that subsidies will be able to proceed according to domestic priorities, such as leveling up, economic growth areas across the UK, driving the green industrial revolution, so that the new plan will be it'll be more nimble. It will be more directed at UK priorities. It won't, necessarily disrupt the level playing field. I think, as with all of these things, everything is in the implementation, right? How does the UK decide where there's competition between, different firms in the same industry? Will they really prevent displacement of jobs from one region to the other, as the government says it will do? It says it will not approve subsidies where it leads to job displacement. These things are easier said than done. So, the history of subsidies regimes is not necessarily, one that free marketers, can necessily be confident of.
Yes.
I think it'll get some scrutiny in Parliament, and we'll have to see whether it will be, meet EU criteria in the implementation.
And I wonder, it's interesting to see that in the Brexit deal, they both signed deals that said they wouldn't provide subsidies to companies that were ailing or insolvent businesses that did not have a credible restructuring plan. So as you say, a lot will be in the implementation and the interpretation of all of this. Let's move on to another theme in UK politics, Therese, that's been written about a lot this week, from the food industry to the transportation industry. It seems a lot of industries dealing with labour shortages. And there was a report out this morning also talking about the extent to which the labour available doesn't match the openings that we have in the labour market. What's the latest there, Therese?
Well, we're hearing about this more and more. Of course, Tim Martin of Wetherspoons made a big splash in early June when he said that the UK should have a more liberal visa policy because the hospitality industry is in dire need of more workers. But it's, as you say, it's not just one industry. You sort of expect that in hospitality because of the extensive closures, but it's farms, it's factories, it's haulage. And, they've all found that the demand for labor just well outstrips the supply. Now, there is a quota system that allows, say, 30,000 laborers into the UK for farming, but farmers are saying they need twice that. And similarly, in the haulage industry, trucks are sitting idle. It's going to take a while for the UK immigration system to adjust. And of course, there are always political risks once they do start liberalizing the immigration system. And this is a government that's very wary of those. Yeah. So, it doesn't seem to have gotten it right so far. Part of that is the pandemic. And it will hold back the economy until it's resolved.
Yeah. Absolutely, it's Brexit and it's the pandemic. Today, incidentally, the deadline to apply for settled status in the UK if you don't have that already post-Brexit. Therese, thanks very much. Therese Raphael from our Bloomberg Opinion team. Coming up, M&A boom. Deals will hit a record high this year. We will talk to the global co-head of M&A at UBS next. This is Bloomberg.
excluded from the workplace, especially when you've got skills and motivation and things to give, can have a really detrimental effect on people's well-being. They can become isolated, of course have the financial stress of not being able to support themselves. That might be their first entry into the broader community where you're building relationships with workmates, and so that's your exposure to culture and you're starting to feel like you belong.
Some people might need to practice their English more, they might just need just some practical experience in an Australian kitchen.
I have not from Australian friend now, but in the kitchen I have many friends.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the European Market Open. Half an hour into our trading session, flat really across European equity markets, a little bit of a downside bias perhaps. And if we look at the sector breakdown, you can see where maybe some of that is coming from. We've got technology stocks, technology names moving to the upside. We're pretty divided really, a slight bias to the downside in terms of the sector picture, but technology and healthcare moving a little bit higher this morning. It's a broad move from the technology sector, the likes of SAP moving up this morning. On autos and parts, VW moves lower today, and that is a big weight obviously on German markets. So autos and parts is one sector in focus to the downside. Banks, utilities also moving lower. A day where it's kind of tricky to pick out any guiding themes. We are working our way, of course, towards the payrolls number and coming off record closes on some US equity markets in yesterday's session. Let's get a Bloomberg First Word News update. The top stories we're covering this morning. Here's Laura.
Thanks, Anna. OPEC and its allies have postponed preliminary talks by a day to allow ministers more time to find a compromise. The group is considering how far to hike output as global oil demand bounces back from the pandemic. The alliance will now convene its advisory body the same day as its main policy meeting on Thursday. North Korean leader Kim Jong-un says a grave incident stemming from quarantine negligence has created a crisis. The news was reported by state media, which didn't provide details of the incident. His comments come after more than a year of official claims that North Korea has avoided COVID. The British government says senior executives who travel to the UK can temporarily leave quarantine if their work is likely to bring major benefits to the economy. The exemption applies to multinational executives visiting British branches of their firms, looking to make an investment in a local business or setting up a new company. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Thanks very much. Laura Wright here in London. Let's just get to a bit of breaking news across the Bloomberg. A red headline tells me that Jimmy Lai's Next Digital will cease operations on July the 1st. This is according to a memo. This memo written by the Next Digital management to staff. So now we have an end date. We saw the end date, the last print run for Apple Daily. Of course, that came a little while ago, but now we have a date for the end of that business. They've had trouble in Hong Kong accessing funds, this business. Jimmy Lai, of course, under pressure politically over in Hong Kong. And we'll continue our conversation around Hong Kong and the relationship with China. We'll continue that conversation in the next part of the programme. Stepping away from that geopolitics for a moment then, global M&A will hit a record high this year. That is according to UBS analysts. There has been an unprecedented rebound in deals activity since the second half of 2020 as companies moved past the pandemic and with supportive fiscal and monetary policies still in place around the world. Let's talk now to Nestor Paz Galindo, UBS Global Head of M&A. Really good to have you on the programme, Nestor. Thanks very much for joining us. So we've seen a boom in M&A. We're sitting here at the midpoint of 2021. Does this continue into the second half, do you think?
Absolutely, and thanks for having me. Yes, it has been a very interesting increase in activity. I will describe it pretty much as having a 2-year worth of M&A, almost 2-year worth of M&A concentrated in 1 year. The tailwinds are there. Basically, we had some pent-up demand from COVID last year that some deals were postponed and happening this year. And in addition, there has been some acceleration on deals that were probably more geared up for next year coming into this year. We think this trend is going to continue. There's and we can go into the drivers. There's all basically the key tailwinds that will support this activity going forward in the next 6-12 months.
And Nestor, yes, and you said quite early on in the pandemic that you thought that this would actually create, perhaps strangely in some people's minds, given the uncertainty we all remember at that time, you thought that this was going to create opportunities for businesses, the strong balance sheets approaching the weaker balance sheets with interest. Has that lived up to expectation? Has that been what we've seen?
We've seen definitely activity in terms of consolidation and also in terms of corporate clarity, as well as some industrials companies making sure that they have the right structure by selling assets and gearing up their balance sheet. So that's definitely a trend. Clearly, the activity around tech has also propelling M&A. There's a big digitalization trend across all industries. That's roughly 35% of the activity that we see globally. Healthcare, the pandemic obviously has put a big emphasis on that sector. And we've seen also infrastructure as a sector, especially in Europe, coming back with a lot of activity.
Okay, so those are some of the sectors we've seen plenty of deals activity taking place in then, Nestor. We sit here with global share prices not far from all-time highs, and certainly that's the story in the United States. With these elevated share prices that we now see, we're not sort of pricing for a pandemic anymore, it seems. Has that had any impact, the fact that assets might be now more expensive than they were just a year ago, Nestor? Is that putting people off at all, giving people reason for caution?
Not at all. In fact, I think that's one of the reasons why activity has gone up. There's more CEO confidence, share price have gone up. If you see the mix of type of deals, cash and shares, the deals in cash have gone down. So more deals have been done with stock currency, and that is propelling the M&A market. Also, if you look at the volume as a percentage of market cap over the past 15, 20 years, that is an interesting indicator. We are not at the peak. We're roughly around 10-11% of the MSCI World Index in terms of M&A volume. The peak, for example, in 2005 was around 19%. So that gives us another indication that actually M&A activity could continue, especially if deals are done with stock.
And what's the trend been in terms of size of deal? Has this been something that has taken place at every sort of size of business, Nestor? Or is this something that big businesses have been able to, with stronger balance sheets perhaps, take account of, or access to capital markets, been able to do more of than smaller businesses? What's the story there?
Yeah, and it's a good question. Basically, the deals that are above 2 billion have gone up. The market of 2 billion to 10 billion, and also the deals above 10 billion have gone up. Roughly 2/3 of the volume now is really in this size bracket. So that is really driving. Obviously, the PE world as well has been quite active in terms of deals, and they're active around the 1 billion, 2 billion, and sometimes going to the 10 billion. But that has been an interesting market. Roughly 10% of the volume, global volume, is driven by LBOs nowadays.
And let me ask you about activism. We've seen activism meet ESG. That's certainly been a theme of the post-pandemic recovery, if I can say that we're in that recovery now. I mean, engine number one in US oil markets, that's certainly one activist investor that's been fairly busy. Is that going to be a big driver of activity into the future, do you think, Nestor?
Activism has always been a theme for us, and the pandemic has basically, in our view, put a little bit of a hold in terms of some of the campaigns. Obviously, the rally that came after that, in terms of share price, has put less pressure on companies. But you have the activists around looking at ESG. You mentioned looking at ways to really drive value and push for agendas, and we think that actually that will come back with more force in the next 12 months.
And Nestor, just finally, I mean, you paint a very strong picture for the M&A markets. You clearly have expectations that this continues into the second half. What's the labour market like right now in terms of M&A banking and being able to get hold of the talent you need? Your crosstown rival seems to be struggling sometimes to hold on to some corporate banking talent. Is now a good time to be hiring?
Absolutely. I mean, the activity is so high that actually all banks, all of us are hiring left and right. It is a good time to be to be in the sector. You know, we are hiring. We have to basically decline deals because we don't have the support. But it is an exciting times. You know, the activity is going to be here for a while, and I think a lot of people are looking at banking as a way to enter their careers, given exactly this type of momentum that we have.
Nestor, thanks very much. Really good to speak to you. Nestor Paz Galindo, the UBS Global Head of M&A. Good to have that global conversation around the M&A theme as we see it day in, day out building. Around 7 o'clock, we get plenty of headlines, don't we, here on the European Market Open with regards to deals taking place. Coming up, we'll be back to the politics story, the global geopolitics story that I mentioned earlier. 1 year on since Hong Kong's controversial security law was introduced, we take a look at the impact that it has had on the city. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
China's Communist Party was a secret group when its first Congress was held here in 1921. 100 years later, it's the ruler of a fast-rising world power. Since coming to power, it's been at the center of key periods in modern China, from the Great Famine and disastrous Cultural Revolution to the reform and opening that propelled China's rise, to the Tiananmen Square crackdown and a virus outbreak that exposed the authoritarian state's flaws before a successful containment was turned to the party's advantage.
Behind me is the site of the first National Congress, surrounded by boutique shops and high-end restaurants. It is itself symbolic of the metamorphosis of the Chinese Communist Party, which now claims more than 90 million members and has arguably reshaped China as much as any of the dynasties that came before it.
The party has tied its legitimacy to China's economic transformation and the fight against poverty. More than 800 million Chinese have been lifted out of poverty since the late 1970s, according to the World Bank. Abroad, the party is projecting strength and defiance, pushing back against criticism and trumpeting the merits of one-party rule as China recovers from the pandemic. But 100 years on, it remains wary of any challenge to its rule. It continues to silence dissent, whether on the mainland or Hong Kong, and constantly implores its people to follow the party forever.
Bloomberg's Tom Mackenzie reporting there from Shanghai. Now, it's been 1 year since Beijing introduced a controversial and wide-ranging national security law in Hong Kong. Since then, 117 people have been arrested under the legislation, which has transformed the city's political and legal landscape. Let's get now the views of Bloomberg opinion editor Matthew Brooker, who joins us now from Hong Kong, and somebody who has a lot of experience, a lot of time spent in Hong Kong, and can give us a sense of just how things have and have not changed, perhaps then, Matthew. This is a city that has changed a lot just in the last year then under the national security law. Give us a sense of what's different.
Yeah, I mean, I think if you came here, say 2 years ago, and then you came back, you wouldn't necessarily notice very many overt changes. It's not as if there are tanks on the street or Communist Party banners hanging everywhere. But the reshaping of society here has really been very radical. There's been a very profound change in resetting the parameters of what's acceptable in terms of dissent and freedom of speech, to bring Hong Kong much closer to the mainland model, where it's really not acceptable to challenge the Communist Party in any way. And people are expected to respect it and follow it.
And so if Hong Kong is looking and feeling increasingly like China in the ways that you describe there, Matthew, what does the future hold? Where does this conversation move next?
It's I think it's very hard to see the trajectory changing. There's really been a kind of multifaceted change here. There's very few aspects of society that haven't been touched by the national security law. You can go through, journalists, the closure of Apple Daily last week, which was Hong Kong's most popular, I think probably only remaining pro-democracy newspaper. Academics, we've had professors leaving universities because of their, supposedly not adequately patriotic points of view, teachers being banned from teaching. I mean, it even extends to shops. You've seen some shops that have pro-democracy leanings coming under harassment from the authorities. I think China has made it very clear that it's the political objective of bringing Hong Kong to heel overrides everything else, and they are prepared to pay whatever price is necessary for that, even if it means a loss of business or disruption to financial markets, which, in fairness, I don't think we've seen at all.
Right. And Matthew, thinking about financial markets and thinking about attitudes from the financial community, I suppose, towards Hong Kong, do you sense from those in finance that you talk to, from those in banking, from those in global business that you speak to in Hong Kong, that the same attractions around Hong Kong exist as used to? I mean, it's been a global city for a very long time. Of course, that relied to a large extent on a rule of law and a certain political backdrop. So does any of that attraction still remain?
Yes, I think it does. It's a very complex question, I think. I mean, I think people are definitely worried. People in business and finance are worried, particularly, I would say, about the rule of law and the kind of pressure that we've seen on the judiciary and the legal profession, which I think is really only likely to intensify. But at the same time, there's no sign of capital outflows from Hong Kong. Probably on the contrary, interest rates are low, the stock market is relatively buoyant. Property prices have been going up. So, I think the brutal truth is that as long as there is money to be made here, there is still a role for Hong Kong as an intermediary of capital flows between mainland China and the rest of the world, then it will continue to have a role. Whether it's still such an attractive place for international financial professionals to base themselves, I think that's a much more serious question.
Matthew, thanks very much. Really good to speak to you. Matthew Brooker from Bloomberg Opinion joining us there with his experiences in Hong Kong. Let's get a Bloomberg Business Flash. The top corporate stories we're covering this morning. Here's Laura Wright.
Thanks, Anna. The board of Suez has recommended a takeover by Veolia, paving the way for the creation of a global water and waste giant. To resolve competition concerns, Veolia will sell about 40% of acquired assets to a Franco-US group of investors led by Meridiam and Global Infrastructure Partners. Moderna shares rose to an all-time high in New York after its vaccine was found to produce protective antibodies against the Delta strain. Moderna says the lab-based studies show that its shot should protect against newly detected COVID variants. Shares also got a boost after India approved imports of the vaccine for restricted emergency use. And we will be speaking to the Moderna co-founder Noubar Afeyan at 10:30 a.m. London time on Bloomberg Surveillance Early Edition. Chinese ride-hailing giant DiDi Global is said to have raised about $4.4 billion after pricing its US IPO at the top of a marketed range. The company sold about 10% more shares than originally planned, putting it on course to be the second largest US listing ever by a Chinese company. That's the Bloomberg Business Flash. Anna.
Laura, thank you very much. Laura Wright here in London. Coming up on this programme then, vaccine optimism edges out variant risks with US equities closing at all-time highs in yesterday's session. But what will the direction of markets be in the second half of this year? We'll discuss that next. This is Bloomberg.
G7 today need to wake up and listen to the science. There isn't room for discussion on this. Scientific inevitability, and they need to act. They don't need to talk anymore. They need to just act.
Climate change has been on the agenda of the G7 since maybe 2003. So we need to see action, not just talk. And we've only got 9 years left to halve carbon emissions if we're going to stop dangerous climate change happening.
United, we'll never be defeated! The world is possible!
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Equity Market Open. And we've got equity markets just on the back foot this morning, despite the fact that US futures still look flat to positive. We see modest losses for European stocks this morning. Let's talk to Laura Cooper, Bloomberg's Markets Live macro strategist. And Laura, we seem to be kept in check by two dynamics this morning. There's the concern around variants. On the one hand, the Delta variant spreading increasingly globally, but there's also optimism around ongoing effectiveness provided by vaccines and Moderna, the news there, the sort of the latest in that line of inquiry. So how far can we move with those two dynamics in play, and also as we wait for the payrolls number on Friday?
Well, I think that there's a number of confluence of factors there. I certainly think that the fact that we are seeing that vaccine optimism compete with those variant risks are kind of making markets really struggling for direction. They're lacking a catalyst. Could that come from Friday's non-farm payroll print? Remains to be seen. Will that be enough to reprice those Fed hiking expectations? But ultimately, when we look at what's happened year to date, European equities are up about 14% on the stock 600. The S&P 500 is quite similar. That's quite an exceptional gain. And I think the question really is, can that continue through year end in Europe? Perhaps, but certainly, you know, something to watch for as we get earnings, as we get more data, and we see what central banks' reaction functions are.
Yes, let's think about that central bank reaction function. We had these comments by the Fed's Waller suggesting that maybe reactions come sooner than anticipated. How do you read the latest Fed news flow?
Yeah, it's quite upbeat in terms of what he anticipates for the U.S. economy. He says that this year has actually been quite surprising. We are in a different phase of the economic cycle, and that does warrant a pulling back of these exceptional purchases. Notably, when we look at what's happening with the housing market on fire, it really raises the question of whether the Fed needs to continue to be buying about $40 billion in purchases of mortgage-backed securities every month. And so I think really the Fed will look to those key economic data going forward, notably the U.S. non-farm payrolls. If we do see an upside surprise above 1 million, which is due just given how the strength of the U.S. economy, that could potentially see more Fed members warm to that tapering timeline coming sooner.
Let me ask you about inflation data. We've got inflation data due out from the euro area a little bit later. Our colleagues at Bloomberg Economics say inflation will ease due to a statistical head fake. What's in focus for you, Laura?
Well, that certainly is likely to be the case. If we look at what's expected for headline, it's expected to come in at 1.9% in June. That's just slightly lower than that 2% that we saw last month. But that's largely reflective of the fact that these base effects from a year ago are fading. And actually, we're likely to see another uptick in inflation going forward in Europe, notably as those tax cuts that we saw last year kind of feed into those figures. But at this stage, like most central bankers, they are continuing to look through those price pressures as transitory. So for European equities, this is still accommodative conditions are supporting stocks, and we're looking to earnings rebound, and just overall this rotation continues to persist.
Okay, Laura, thanks very much. Thanks for your insights. Laura Cooper, Bloomberg Markets Live macro strategist. Let's end the hour with a little bit more data coming through from Germany. The German jobless number down by 38,000. That is much better than was anticipated. The expected drop was 20,000, so that is good news. German unemployment declines as shops and restaurants reopening. We will just leave the program there, shall we, on the positives. 8:56 here in London, just coming up to an hour into our trading session. European equity markets just a little weaker. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
What is key is that central banks have to be very watchful, in particular advanced economy central banks.
I think there is some downside to trying to get too clever in how you move left and how you move right.
Things have been proceeding pretty much according to the way I thought they would, so I didn't feel any need to move my dots forward.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Wednesday, the 30th of June. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Vaccine optimism, stocks rise as Moderna says its shot produces antibodies against the Delta variant, fast becoming the dominant strain in Europe and the rest of the world. Taper Talk, the Fed's Christopher Waller tells Bloomberg exclusively that the strength of the U.S. economy could warrant a rate hike in 2022. And Wall Street steps up its incentivization program. JP Morgan has upped the pay of its first-year analysts to six figures as Lazard says employees can work 2 days a week from home. There you go. That's a good incentive. If you can say the word, that means incentive. You also get a bonus. That would be the way I do it anyway. Good morning, everyone. Quite a lot going on in the markets. It's been a volatile 3 months. European stocks have made steady gains while commodities have surged, and Bitcoin, after its meteoric rise at the beginning of the year, has slipped 40% since March. Here's what some of our guests had to say as the second quarter comes to an end.
We've seen this rotation be really fueled by both the virus as well as inflationary concerns. And, you know, these big companies with secular earnings momentum are the ones that have been leading the market.
The physical demand is being pulled from the entire global economy where interest rates remain very cheap, even if we're past the maximum Fed accommodation, right, where we've seen increases in a couple of interest rates like the interest and excess reserves, very small, very modest, but expectations of more rate hikes ahead.
As we look forward into the second half of the year, given how oversold the tech sector was and given how on a valuation basis relative to value sector has really underperformed, we think that tech is ripe to buy.
Now let's get straight to our top market story with our Danny Berger. Danny, apart from the fact that there are incentives out there and I cannot pronounce the word, how is the last day of the quarter shaping up so far?
It's a difficult day for everyone, Francine, whether you're talking about bankers or the markets, just because it is the month end, it's the quarter end, it's the first half end. So with a lot of these things, you kind of need to look at it, all right, there are certainly fundamental stories winning out, but a lot of this is just quarter end, first half end rebalancing. But really the theme to come out of this day is that continuously we're getting that growth story that's winning. Anything that's a little bit more value oriented, for example, Europe is falling today when you have the NASDAQ outperforming the S&P 500. So that also means because of those value wobbles, because of a little bit of a drop in China today, we're looking at an all country world index that's slightly lower. If it can hold on to this level though and not go too much lower here, that means that this will be the best first half for global equities since 1998, the second best first half, rather, I should say. 2016 was slightly better than this one, but still, it's a lot of momentum. And can it continue? This brings up a big question. Is this a bubble in equities or bubble in corner of the equity market? Well, one big proponent of further gains has come out just overnight, Tom Lee of Fundstrat, saying that he's raised his price target to a street high of 4,600. The average target is 4,200. 200, which would imply no move on the S&P 500. Tom Lee says that, look, you have a lot of strong momentum, not just in the market, but in the economy as well. The Fed is going to stay dovish. The credit market is strong. He says the one risk he sees is the Delta variant, which of course is a really big risk at this point. But he says so far it hasn't caused enough lockdowns that it would really dent the prospects for the S&P 500.
Danny, a big win for England yesterday versus Germany and the Euros. In fact, the first thing that my driver told me in the taxi cab was like, you know, how much did you drink last night? I didn't, but of course I'm drunk on euphoria.
Yes.
This wouldn't be Bloomberg if we didn't ask, are there any implications for sterling?
Okay, well, I got to give a tip of the hat to Vasilius Kalamaris because he, on our MLive team, did a beautiful data mining. I mean, of course, you can't use this to actually invest, but I love a good bit of data mining. And he found that every time England lost in the Euros, the day after sterling fell. One of the exceptions was 2016, but of course 2016 there were Brexit things happening, so we can kind of not count this one. Well, in the past 2 days, we've been in a pretty tight range, so maybe this theory doesn't totally play out with England winning yesterday. But one idea I love that I talked to Vasilius about as well is that, okay, the game started at 5 p.m. London time yesterday. That's kind of still in the normal trading day. Maybe there were people who were just away from their desk watching the game. And Francine, like you, I talked about it with the cab driver on the way in, and there were still people out on the street at 3 a.m. when I get my car in celebrating. So, I mean, I'd have to imagine there are people who maybe are going to be calling in sick today and not showing up to be trading sterling.
I mean, the celebration was epic. I know my street definitely erupted. I can't wait for the England final to see who my family loves more.
I'm there with you.
Yeah, I don't know, but look at that. I mean, it was really, you know, it was absolute euphoria. And you think back about, you know, the fact that now the manager lost the penalty. What was it, 55 years ago? And you just think like this was a good moment for the UK.
Yeah, exactly. I think the title of the Sun today was something along the lines of like 55 years in the making. England keeps Raheeming, which is a reference to Raheem Sterling, who scored one of the goals. I think this is Box Park in Shoreditch. That's what it looks like. And I have to say, Francine, I am so excited for England, but not sure this works for social distancing. This is maybe a little bit too much of celebration given the times.
Yeah, I thought that as well, but we'll see. Yeah, we'll see if we have clusters. Danny, thanks so much. Our Danny Berger there with the very latest on the markets. Now joining us, also always euphoric, is Eric Nielsen. He's UniCredit Group Chief Economist. In a career spanning 40 years as an economist, he previously worked at Goldman Sachs, the World Bank, and the IMF. I think you're also a big football fan, so thank you so much, Eric, for waking up for us. I know it's early if you stayed up to celebrate. Eric, when you look at the great debate that is inflation and the focus now on a possible rate hike sooner than maybe the market is pricing in, is there a worry that actually it changes the name of asset classes and that there's a certain type of dislocation that then feeds through the economy afterwards?
Yeah, hi, Francine. That's always a risk, right? We are in a phase where we see this inflation, and there's been a clear divide between, on the one hand, economists and until very recently, policymakers all saying unanimously that this is temporary, monetary policy looks through it. But of course, the market started to trade some sort of a probability. So you saw the inflation hedges in Europe doing very well compared to nominal yields or bonds so far this year. But now we have seen, and this is the concern for me at least, we have seen now some policymakers, I would say on the sort of the retail side, the Bundesbank President Weidmann, and we saw it in America, some starting to say that maybe we actually need to react to it, maybe this could become more important. And if that trend start to move into the mainstream of monetary policy side, then I think this very nice party, if that's the right term, in equity markets could be over for a while.
Eric, we also spoke to the Fed Governor, Christopher Waller. Here he is.
It would have to come back very quick. The unemployment rate would have to drop fairly substantially, or inflation would have to really continue at a very high rate before we would, take seriously a rate hike in 2022. But I'm not ruling it out.
So, Eric, if inflation is not transitory, when do you find out? I mean, for the moment, you believe that actually inflation in Europe and also in the US is transitory. If it's not, where would you see it first?
Well, first of all, it's definitely transitory in Europe, with as certainly as you can say. The output gaps are just too large in Europe, and the stimulus is not as significant as in America. In America, it is, I think it's transitory, overwhelmingly likely, but it's not quite as certain. And when will we see it? Sometime, I would suspect, at the end of the year, early next year. If it doesn't start to come down sort of next spring, then I've been wrong in my assumption in America, and then you could find the Fed behind itself. And then that's sort of the concern that some have, and reasonably so. I think it's a risk they're right to take and assume that the overwhelming probability is that it's transitory, but it is in America, say early next year. And then the big question, of course, comes how the transmission comes to Europe, whether it's through higher yields or through the FX, and that's going to make it difficult for the ECB, clearly.
So how do you see the divergent growth between the EU and the US? And actually, is there a danger that the stimulus gets taken off too quickly here in Europe and actually stays for much longer in the US?
Exactly. This is exactly the big concern. First, let's establish that the US has already established GDP levels at pre-pandemic levels. And on our forecast and most people's forecast, they're going to hit the extension of the trend from before the pandemic hit us. They'll hit that already by the end of this year, very early next year. That's the time, at the best, early next year, when Europe just gets to the 19 level. So we are already in Europe quite far behind in the recovery compared to the US. And then the stimulus, fiscal policy in Europe looks like it's going to be, some of the stimulus will be withdrawn, not a whole lot, but a bit of it. And then we have this overwhelming risk that the ECB feels that given the pandemic is sort of starting to look behind us, they have to phase out the PEP because that was sort of very pandemic related. But how can you possibly withdraw monetary stimulus at a time when the inflation forecast, their own inflation forecast, still is well short of the target? So they will try to find something else, but you can't quite get it. So the risk is clearly of premature withdrawal of stimulus in Europe, not so much in America. On the opposite side, I would think so. Divergence.
So what does this divergence actually lead to? A harder time in Europe, but could we actually see more populism? Does it have, this is the first base effect. What are the consequences of that?
Well, the first side, of course, is how Europe reacts to it, and that depends on how the transmission comes. There's a positive transmission, which is if America grows faster than Europe, then it will sort of get some of the effect in Europe by seeing the better global demand. Now, the other side of it is that yields will then move higher in America, and that will transmit into Europe. Under normal circumstances, that comes through the exchange market. But what we've seen recently, as you know, earlier this year, was that it actually came predominantly through the yields market. And then you import in Europe, higher yields than actually what we want. And then the ECB has a new issue on its hand, how you deal with this at a time when the pressure is to phase out the PEP. So the bottom line of all this is, of course, that the trade that everybody loves today, and I love too, which is European equities, because of the valuations relative to the US and the general recovery story is very nice, then that could come under stress later this year, of course. And I think that's probably for me at least, the key thing to watch out for now.
Eric, thank you so much. Eric Nielsen of UniCredit stays with us. We'll talk a lot more, of course, about this divergence. We'll also talk on emerging markets. Now, coming up, EU economic confidence hits the highest in over 2 decades, even as the Delta variant starts to take hold in France and Germany. We'll talk a lot more about Europe next. This is Bloomberg.
Germany is still faring quite well. Our economy is recovering. It's on the path towards recovery. In Europe, it's going to take some time until economies are back on track and are strong again. We have to pursue sound fiscal policy in order to have the necessary freedom of maneuver to weather future crises.
Well, the German Chancellor there, Angela Merkel, speaking there at the Brussels Economic Forum about the European recovery from the coronavirus crisis. Now, despite growing global concerns about the more contagious Delta variant, European economic confidence has jumped to its highest in 21 years. Faith in a rebounding services sector actually boosted the EU sentiment indicator to its highest since March 2000. Eric Nielsen of UniCredit is still with us. And Eric, you were telling us that one of your main concerns is that actually stimulus gets maybe taken away a little bit too soon here in Europe. It's up to the various countries to make sure that they're actually on a better way once they receive money from the EU. If you look at the various countries, who do you think will come out better, once they kind of gain some ground that they lost because of the pandemic?
Well, certainly Northern Europe, Germany included, will come out better for at least three reasons. One, the pandemic didn't hit them quite as bad as it hit Italy and Spain, for example. These countries are less exposed to the still vulnerable sectors in tourism, for example. And third, they did less policy stimulus than Germany. I mean, Germany last year, when you think about the complete U-turn in attitude to fiscal responses, also the guarantees were phenomenal, absolutely phenomenal. So they will come out better than the others. But you also mentioned the European Next Generation EU, and as that money starts to flow out. And there, certainly from what I hear in Brussels and what I can judge from the various plans, Italy's is probably the most detailed and most ambitious plan, and also the biggest. So I have quite great hopes for that part of the fiscal story, if you will, where Italy could be doing very, very well in terms of raising the potential growth rates, that is what it's all about, and not just stimulus.
Eric, what's the biggest or more concerning question for the ECB right now? So if there's a movement in yields, if there's a movement in euro-dollar, is there anything that the ECB can actually do?
I think if I were the ECB, yields would be much greater concern. The weight of the economists, when we think about financial conditions, indices, and the impact on the real economy, the yields are much more important than the exchange rate. So this would be the number one concern. And of course, if I were in Frankfurt, I would also be concerned about the noise from some of the national governors of phasing out the PEP before, I think, by most standards, you would say the pandemic is over, or at least the economic impact of the pandemic is over. But yields are really important, and I wish they would say it outright, but yield curve control is what they have de facto done and what they should do. They should be proud of what they're doing.
Eric, the British government has also revealed its post-Brexit system for overseeing subsidies to companies. So now it's promising to make quicker decisions than when the country was in the EU. This goes back to one of the biggest fears that the EU had actually in negotiating Brexit. What does the UK economy become? Do you see more leverage being taken in, cutting back regulation? Can it really become Singapore on Thames?
I don't buy that. I don't think that's the case. But it's a difficult one to say, right? But I think for me, the biggest fallout of Brexit so far, but it's very difficult, I should say, difficult to detect in the pandemic what's what, but is the establishment of a, if I may say, very confusing government. It's unclear what direction this country is going in, which direction it can go in. It's clear to me that Boris Johnson, if he has a strategy, it's a very global one. But a lot of his backland, or those he depends on in the Conservative Party and in the government, are probably not on the same page. And then, of course, there is the issue that if you do subsidies and intervene in the economy directly, as they are about to do in some areas, apparently, then you might run counter to the agreement with the EU, and then you have new tariffs, all sort of issues coming up. If you want to do something very different from your biggest trading partners, you have to assume that these trading partners are reacting, right? So I would think it's too early to tell which way the UK is going, but But Singapore attempts, I would bet my money against.
Eric, thank you so much, as always, for your insight. Eric Nielsen there, UniCredit Group Chief Economist. Now, coming up, how do you attract new talent after the pandemic? Well, JP Morgan tries the hard sell, offering new analysts six-figure salaries. More on that shortly. This is Bloomberg.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. OPEC and its allies have postponed preliminary talks by a day to allow ministers more time to find a compromise. The group is considering how far to hike output as global oil demand bounces back from the pandemic. The alliance will now convene its advisory body the same day as its main policy meeting, which is happening on Thursday. Now, the New York City Board of Elections has taken down reported results for the Democratic mayoral primary election. The board says 135,000 ballot images were used for testing were mistakenly counted. Results posted earlier suggested the lead of frontrunner Brooklyn Borough President Eric Adams had narrowed to just 2 points. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, coming up, the Delta variant is forcing fresh lockdowns and tighter restrictions across the world. We'll have the latest on that next. It's almost also at the end of the quarter, so we'll have a full roundup of your top market stories. We'll look at equities, we'll look at treasuries with our Danny Berger. This is Bloomberg.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Vaccine optimism. Stocks rise as Moderna says its shot produces antibodies against the Delta variant, fast becoming the dominant strain in Europe and the rest of the world. Taper talk. The Fed's Christopher Waller tells Bloomberg exclusively that the strength of the U.S. economy could warrant a rate hike in 2022. And Wall Street steps up its incentivization program. JP Morgan has upped the pay of its first-year analysts to 6 figures, as Lazard says employees can work 2 days a week from home. Well, good morning, everyone. I'm Francine Lacqua here in London. Welcome to Bloomberg Surveillance Early Edition on this Wednesday, 30th of June. Now, Wall Street is stepping up its incentives program in an effort to attract new talent. JP Morgan has upped the pay for its junior bankers, while new analysts will now be offered starting salaries of $100,000. Meanwhile, Lazard is hoping to keep a hold of current employees by offering ongoing flexible working arrangement. Let's get more with our Danny Berger. Danny, I imagine after 14 months of pandemic, so the chief executives of banks are going, right, what do people want? What can I do about it? But does it all just come down to recruitment efforts?
I mean, you'd have to imagine it does, Francine, because if you think about the public image of banks over the last 14 months, I mean, it hasn't exactly been great. We've talked a lot about Goldman Sachs junior analysts putting out a research report about how unhappy they are. This topic of burnout keeps coming up. So if you want to not only keep people but attract more people, it makes sense that Wall Street are doing these kinds of things. And of course, one thing you could do is to have this hybrid model like Lazard is doing. So 2 days out of the week, you can work from home, saying that, yes, this is going to help us recruit by remaining flexible in how our employees treat working and working from home. You could take this other approach that JP Morgan is taking, boosting the base salary. We have heard other banks like BAML, for example, giving their bankers a raise. We've heard HSBC, for example, giving bonuses. So giving them money, of course, is a great way to retain and get new talent. But then you look at a lot of other people who say we need people in the office. JP Morgan's one of them. Goldman Sachs is one of them as well. We need them in the office. Maybe what we do is we just hire more people to help relieve some of the burden that you're facing because deal activity is so high. Of course, you can say you're hiring more people, but maybe you need incentives like these to actually make that happen.
Yeah, Danny, I mean, is there a clear divide between Wall Street and actually Europe? Or there's also a push in terms of, other perks that people could or could not have.
Yeah.
But how difficult is it to say, right, Europe is doing one way, the U.S. the other?
Well, it's largely a cultural thing, right? We definitely see more European banks offering the hybrid, flexible working type thing, maybe even save on office space as well. And not that we're not seeing that in the U.S. For example, Goldman Sachs is looking to Dallas, Bloomberg can report, in order to build out some more offices there, hire more people in Dallas, which of course is cheaper. Much like in Europe, they're abandoning some office space. So we did get a response from Goldman spokeswoman Maeve Duvally, who says, we continue to grow our presence in Dallas area, but can't comment on our future expansion plans. But it does look like Goldman Sachs, according to people familiar, is looking at real estate that's about half of its size in New York. So it's a big office, not as big as it is in New York. But again, a lot of this is not just cutting costs, but recruiting as well. A lot of people don't want to live in New York City. A lot of people don't want to live in these global financial hubs because perhaps, life is more crowded, it's more expensive. So I think that this is a trend that will likely just continue with Goldman really leading the charge here to move out of Wall Street.
Danny, thank you so much. I love this story because it does. So many people are now, thinking about what comes after the pandemic, and I guess want life changes. Our Danny Berger there on top of Wall Street, as always. Now, as the world eyes a summer reopening, perhaps a rapid spread of the Delta variant is forcing backward steps in the fight against coronavirus. The UK is recording its highest case number since February. Australia has locked down many of its state capitals. Well, joining us now is Jennifer Rohn, Principal Research Fellow from UCL's Division of Medicine. Professor, thank you so much for joining us. There is so much going on. You're welcome. Because the Delta variant is now extremely present in the UK and other parts of the world. How much of a concern is this? It doesn't seem more deadly. It seems that the vaccines actually work against it. And yet we're hearing about, waves of people going to hospital.
I think the problem is that this variant is really contagious, much more contagious than previous variants. It's very easy to get, and you can't really stop the spread of a variant unless you've got a wall of vaccination. And I'm afraid no country, even the UK, which has such a great record, has that wall that can prevent these variants from taking over. So what it is at the moment is a race between vaccination and the spread of the variants.
Jennifer, how concerned are you about some of the emerging markets actually not having enough vaccination? So here in Europe, we seem to be doing okay, the US as well. But if we don't vaccinate the whole world as fast as possible, could it lead to much worse variants to which the vaccinations actually don't work?
Absolutely. That's exactly, you've hit it right on the head. So as long as you don't have that wall of vaccination worldwide, there will be a breeding ground for new variants. So all the ones that the vaccine works against will get eliminated, but then they will be outcompeted by new variants, which are always coming up. And then these new variants threaten our security because they may be able to get through our vaccine strategies. So as long as the entire world is not safe, nobody is safe because borders are porous, people get through, variants spread. We've seen that over and over the past year. So until everyone is vaccinated, we can't sit back and say, oh, I'm okay, I've had 2 jabs. It doesn't work like that.
Do we still need to wear masks when we're vaccinated? So the U.S., the way the U.S. is going about, how to deal with people that are double vaxxed compared to some European countries is very different.
Well, there's not a lot of data on whether vaccination prevents transmission. So we know in some cases that it does, but I think we don't have enough evidence. And I think it's a good bet if you've been doubly vaccinated and it's been, a month since your last vaccine, you're probably unlikely to spread virus as much, but it's not completely ruled out. So. And of course, most people aren't fully vaccinated. So I think masks may be with us for some time, although I do understand that the public's appetite for them is waning.
Yeah, Jennifer, the other question that comes up, very often is, first of all, should we vaccinate children, from 12 to 18 or even under 12? Would that make a huge difference given how many, kids are at home now because of the spread through schools, certainly here in the UK?
Yeah, my son is home right now because there was an outbreak in his school. So I think kids are where the viruses are spreading now. So the Delta variant is sweeping through the UK, for example. Many of this is happening in schools. And again, if you're getting infected in school, even though it's maybe not going to harm you, you're not going to go to hospital, you're not going to die, you're still a breeding ground for variants. So a child who's infected can create new variants, and these can then spread to other people. So I think vaccinating children would be an excellent idea. I do understand that some people feel hesitant about that, but there is no reason to be hesitant. The vaccines have been shown to be very safe, and I would encourage, the idea of getting everybody vaccinated eventually.
Is there an ideal vaccination mix? So it seems that some of the highest efficacy, rates also come if you do, for example, AstraZeneca together with an mRNA. Is it something that's proven, or are there still clinical trials on this?
I think we're still trying to work that out. Even Public Health England just had a great study that showed that Pfizer alone or Oxford alone was more than 90% effective at preventing hospitalization against the Delta variant. So even just the single type vaccines are working really, really well, much better than we had hoped. The mixing and matching, I think the data are still out.
Jennifer, the million-dollar question is do we just need to learn how to live with this? So I know it's easier in developed countries where, of course, we have critical mass vaccination, but is it something that we'll have with us for the next 2 to 3 years, if not longer?
I think we'll have it with us forever. I think this is going to be like influenza. But the good news is that eventually we can get on top of it as long as people have a baseline of vaccination. As the new variants come online, we're already having clinical trials. For example, Oxford has tweaked the vaccine to work against the beta variant, and this is now in clinical trials. So as long as we can respond as new variants arise and we can tweak our vaccines and get boosters every winter, just like we do for influenza, I think we will live with it for the foreseeable future, but we can also keep it under control.
Jennifer, thanks so much for joining us today. Jennifer Rohn, their Principal Research Fellow from UCL's Division of Medicine, joining us this morning. Plus, a little bit later, we'll also catch up with the Moderna co-founder, Noubar Afeyan. So don't miss that conversation. We'll talk about his fund, we'll talk about mRNA vaccines, and of course, we'll talk about preventing the next pandemic. Coming up, delayed OPEC Plus, delayed preliminary talks by 1 day to allow more time for a compromise over oil output. Up next, we discuss that with our executive editor for Energy and Commodities, Will Kennedy. This is Bloomberg.
Ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
If you own something good, hold it for a long period of time. So to me, find those right neighborhoods to invest in, deploy your capital, and then be patient.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the Chinese automaker Geely is exploring its fundraising options after backing away from listing on Shanghai's Nasdaq-style Star Board. In his first international media interview since becoming chief executive, Daniel Lee spoke about the company's investments and his intentions for strategic partnerships.
Would you be looking for a valuation above Daimler?
We cannot say target to beat Daimler because both Volvo and Daimler are Geely's investment, Geely's stake. But we are quite confident that Volvo will be given very good valuation by the market.
And an IPO potentially in September of this year?
We will see the communications between Volvo team with the regulators and also potential investors. Again, we don't set up any pressure on the timeline, but we believe we can move quite fast.
Could Volvo make Apple's car?
I think it's possible to develop any new car development ideas, especially
including Apple's car.
I don't mean Apple's car itself. I just mean the new modern smart cars with all the best features of connectivity, autonomous drive, shared mobility, and to provide the best user experience.
Okay. Have you or any of the team at Geely had any conversations with Apple?
No.
Okay, but you would welcome that conversation?
Yes. For your information, we are open to have the partnerships with, all strategic industrial and internet leaders.
Well, that was the Geely Chief Executive Daniel Lee speaking to Bloomberg's Tom McKenzie on his plan for the company. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. The board of Suez has recommended a takeover by Veolia, paving the way for the creation of a global water and waste giant. To resolve competition concerns, Veolia will sell about 40% of acquired assets to a Franco-US group of investors led by Meridian and Global Infrastructure Partners. Now, Moderna shares rose to an all-time high in New York after its vaccine was found to produce protective antibodies against the Delta strain. Moderna said the lab-based studies show that its vaccine should protect against newly detected COVID variants. Shares also got a boost after India approved imports of the vaccine for restricted emergency use. And we'll be speaking to the Moderna co-founder Noubar Afeyan at 10:30 a.m. London time on Bloomberg Surveillance Early Edition. And Elon Musk's satellite network Starlink is on track to beam broadband internet everywhere in the world except for the polar regions by August. Musk says SpaceX has launched more than 1,500 satellites so far and is already operational in about a dozen countries. He sees the company having 500,000 users within 12 months and says Starlink will list publicly once cash flow becomes more predictable. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Now, OPEC and its allies have delayed preliminary ministerial talks by a day. Two delegates say ministers want to allow more time for a compromise over oil output. Now, the coalition, led by Saudi Arabia and Russia, is considering whether to continue reviving more crude supplies as global demand bounces back from the pandemic. Well, joining us now is Bloomberg's executive editor for energy and commodities. He's Will Kennedy. Will, good morning. Thank you for joining us. So what are the main disagreements that they actually need to smooth out?
Morning, Francine. I think there's a acknowledgement among the wider OPEC Plus alliance that more oil is going to be needed in the second half of this year. I think the discussion revolves around how quickly to put that oil into the market and how much is needed when. It's a familiar story to those of us that track OPEC's politics through the last few years. Russia wants a slightly bigger increase, we understand, and the Saudis are striking a more cautious pose. But talks today will be hopefully aimed at bridging that gap.
Well, I mean, if they delay by a day, I don't know how likely a compromise is, but my gut feeling was if you delay by days because you think that, you know, we're more likely to get a compromise than not get a compromise. Am I wrong?
I think that's probably right. I mean, with the obvious exception of last March when relations between Saudi Arabia and Moscow collapsed and we ended up with that disastrous price war, they tend to find a way to bridge the gap and tend to find a compromise that works for everyone. I think by delaying, they're giving themselves the space to do that between themselves probably before they take their ideas to a wider group, as you suggest. I mean, previous compromises we've seen maybe a schedule to gradually increase production over the coming months, or sometimes Russia's been allowed to increase production when others have held their steady. So we may see something like that emerge.
Will, overall, is there a worry that we're underinvesting? So I don't know how to look at this transition. We were speaking to Javier Blas yesterday on this. If you look at the transition into greener energy, is there a worry that in the meantime we're not investing enough in old school things like oil, and so the price of oil could shoot up and kind of scupper the recovery?
It's a remarkable turnaround in the oil market. You know, a year ago, we were completely awash with oil and we were looking for places to store it. And now I think there is an increasing concern that demand and supply could become unbalanced, and a lack of investment over the last few years, which has been accelerated by the energy transition as well, risks undershooting demand. And clearly demand's recovering quickly. So yes, it is a danger, but I would bear in mind that at the moment, OPEC has a good deal of spare capacity from the cuts they agreed last year, and they probably can keep the market supplied. It's just really a question of how quickly they want to do that and how high Saudi Arabia wants the price to rise. The other wild card, of course, is the Iran talks and when more Iranian oil may come back into the market later this year. I think that's a key concern for Saudi Arabia as they approach this meeting.
Well, we have a viewer question, so thank you to all the viewers that actually send in questions. I love receiving them, so please keep on sending them. This is a difficult one because this person writes in, Will, and they basically ask, what is the reaction if the following scenario plays out? So if oil, you know, if the output is increased by 500,000 to 1 million, or if nothing is increased, is it difficult to see what range the oil market is in?
Yeah, I mean, it's difficult to know how the market's going to react. I think the feeling is, talking to traders and analysts in the market, that most people are expecting an increase of about 500,000 barrels a day. So anything that falls short of that will be taken perhaps by the market as a slightly bullish news, and anything that goes a bit quicker may be a little bit bearish.
Thank you so much, our executive editor for energy and commodities there, Will Kennedy. Now, coming up, we'll have plenty more, of course, on oil. Also, $4 trillion of slump in global tourism could cost the world economy very dearly. Up next, we discuss that with Market Live's Eddie van der Walt. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now let's discuss today's market action with Bloomberg MLive's Eddie van der Walt. Eddie, I have a million questions. Did you watch the football? And then we'll get onto the markets and the quarter end.
You know, I actually did. I watched this England-Germany game because there's just been so much excitement around it. I even made my kids watch it because they were born here, part of their heritage, but they had to explain the offside rule to me halfway through. So, you know, I don't know how much that helped.
It's just brilliant. I know, you get a standing ovation for that. We also looked at charts to see whether it moved sterling, which I find hilarious. It did not move sterling, everyone, even if you wanted it to. Eddie, when you look at, you know, the end of the quarter, what are we looking at? It's still, I guess, inflation. So what can we see in the summer months? What's your focus?
Yeah, so absolutely. So what we're seeing at the moment today, we're seeing there's a little bit of a sell-off that started in European stocks in the last hour or so, and it became a little bit serious. I mean, at my last check, it was down about 0.8% for the European stocks Europe 600, and it's led by cyclicals, but not led by travel stocks. So it doesn't feel like this is a virus fears thing. It feels like it's quarter-end rebalancing. Now, of course, the stocks Europe 600 had a significant run, I think up 5 months in a row or so. So it's a really good quarter. But I think we're just getting some of that being priced out at the moment, and a lot of event risk ahead. We've got OPEC coming up. We've got the jobs numbers at the end of the week. I think the summer could just get a little bit lively at this point.
Yeah, I have to say the cyclical sell-off has been going for quite some time. I don't know how much more of that we'll see, and how much you'll, for example, focus on gold on the back of what we heard from certain Fed officials as well.
Yeah, absolutely. Gold had a weird one yesterday. Gold sold off at 1.5% while everything else was standing still. There was a little bit of contract roll in there, but if I look at the options market has been skewing an awful lot more bearish on gold. And I think part of that is just the idea that central bankers in general are getting a little bit more hawkish than they were. Still very much focused on the Fed, but, you know, the Fed is still the biggest player in town. And I think as we move towards Jackson Hole in the next quarter, I think that's a real risk for gold, and we could see some ETFs selling off further.
Yeah, I really cannot believe we're close to Jackson Hole already. I feel like, you know, it was January 2021, 2 days ago. Thank you so much, Eddie van der Walt there from our MLive team. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kaylee Lyons out of New York. We'll have a full roundup, not only on OPEC Plus, delaying by 1 week to try and get a compromise, but a lot of the focus, of course, is on the end of the quarter. We'll focus on Bitcoin. We'll focus on inflation. We also have Noubar Afeyan of Moderna. That's a good conversation on variance. This is Bloomberg.
Freedom delayed 4 more weeks. That's the delay expected to be added to the lifting of all lockdown restrictions in the UK. It had been due to happen on June 21st, but UK Prime Minister Boris Johnson to address the nation later today and to push that date into July. It's all down to a surge in the Delta variant, and government ministers thought to want more people to have their second COVID vaccine before they ease all restrictions. How are markets responding? Well, they're largely taking it in their stride. The FTSE 100 actually gaining ground. Strategists saying that delay largely priced in, that we could see further weakness for travel and leisure and hospitality stocks. The pound falling against the dollar, though Nomura saying this weakness likely to be temporary. In fact, money markets largely bullish on sterling, given the pace at which economic gloom has been lifting here in the UK. Indeed, last week's GDP figures pointed to an economy that is recovering quickly, and later this week we'll get unemployment, inflation and retail sales data that should all further illuminate the economic recovery.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This year has been a surprise. None of us back in December would have thought the economy would be where it is right now. So it has moved faster than we thought. We've made better progress than we anticipated.
I think there is some downside to trying to get too clever in how you move left and how you move right.
The big question any investor must face looking for the next 6 months is, can liquidity continue to be the dominant factor?
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, June 30th. Our top stories today. Mid-year status report. The first 6 months saw stocks on track for their second best performance since 1998. We'll look at what lies ahead in the second half of 2021. A record-breaking day for Moderna. The drug maker climbs to a new high on evidence that its vaccine can protect against a highly contagious Delta variant. We'll also talk with Moderna's co-founder and chairman, Noubar Afeyan. And business in post-Brexit Britain. The government is promising to make faster decisions on company subsidies now that the European Union's not involved. So there's quite a lot going on, Kaylee. I have to say, squidgy is probably how I would describe the markets, although it's not CFA level 3, but they're a little bit directionless, although we're seeing a bit of a cyclical sell-off.
Yeah, there's not a lot of fireworks in this last trading day of the month, the second quarter, and of course the first half, Francine. In Asia, it really was a mixed session. You did have some stocks higher, including in Australia, in Korea, and of course in China, where the CSI 300 was up by about 0.7%. The Nikkei ending the day just lower, though, and it was actually the Hang Seng that was the big underperformer, down about 0.6%. Of course, investors continuing to weigh the Delta variant and the implications it may have for growth and therefore different assets in Asia, and that's really showing up in FX. Emerging Asian currencies under some pressure, the really losses being led today by the Philippine peso, heading for its worst month in about 2 years, weaker against the dollar today by about 0.6%. And then the Indonesian rupiah also weaker. Indonesia, of course, is expanding restrictions to try and stop the surge in virus cases there. As far as how the U.S. goes, of course, we did reach record highs yesterday. Today, though, it looks like we may come off those levels just a touch. After being positive earlier in the session, S&P 500 futures now down about 10 points. In the Treasury market, we are seeing yields coming in a touch. We're just underneath 1.47% on the 10-year Treasury. It is a stronger dollar story today, and of course, the dollar is heading for its best month since May of 2020. And then I also wanted to note WTI crude. Of course, OPEC Plus is meeting tomorrow. It has delayed its preliminary talks until tomorrow, but of course it is weighing the stronger demand picture, and that stronger demand picture has sent oil toward its best first half since 2009, Matt.
Yeah, stronger demand and also supply side constraints that Javier Blas wrote about yesterday in his excellent big take. I'm looking at some data coming across, first of all, for the European Union that shows inflation was a little bit less than 2%, actually 1.9% for June. That matches the estimate that we had, so this wasn't unexpected, and economists that we've spoken with expect inflation to pick back up in the second half of the year. But just to note, right now we're seeing June inflation come in at 1.9%. In terms of equity indexes, we are down across the board here in Europe, seeing drops of 1%, in some places 1.25% or even more. You can see the Stocks Europe 600, the broader equity index benchmark, down more than 1% right now. The German Bund yielding negative 19 basis points, so coming down a little bit as investors buy that debt. The pound and the euro, frankly, are both little changed against the dollar. So even though you see a climb in BBDXY, you don't see as much of a drop in the euro and the pound. It's really other currencies that are losing ground. And then I just wanted to put in Porsche Holdings shares here, down 5% and change today. And we have an excellent piece out from Michael Dean on Bloomberg Intelligence this morning showing that the discount in Porsche Holdings to its stake in Volkswagen is larger than it normally is, but not as large as it has been in the past. Remember, Porsche Holding, these are not shares in Porsche, the car maker. This is the Porsche family's holding in Volkswagen shares. So that represents a discount to what they would be worth if they were simply sold off as VW shares. Very interesting move there, I think, in the Porsche holding. Maybe sometimes, Francine, maybe sometimes retail investors confuse what that is.
Maybe. Matt, I don't know. There was a gift for you there, talking about German bunds and talking about sterling. I mean, I'm sure we have some data showing how sterling moves on the back of a Euro competition when England wins. It's coming home.
I'm wearing
it's very Prince
George's England tie. Yes. You know, it was an amazing and historical defeat yesterday, and I will be supporting England for the rest of the Cup because, and normally I don't care, but all of a sudden I really do care, and I can't wait to see the following games.
Yeah,
you'll support
more than
which country do you support?
Well, I'm Italian, but
Italy,
we'll have a chat off air about who you're supporting. A lot of hungover traders, I can tell you for free, here in London the day after that match. Now, a look at what else is ahead today, and the Bank of England chief economist Andy Haldane speaks on changes in monetary policy in the past 30 years. That's at 7 a.m. New York time. At 8:15 a.m., we'll get U.S. ADP employment change. Then the OECD meets to finalize a global tax proposal ahead of a G20 meeting. And the New York City Board of Elections is set to publish a corrected mayoral count after erroneously counting test ballots alongside election night results. I mean, that's a story that I know Kaylee was on top of, which surprised many when that story broke. Now, the second quarter coming to an end. It was another volatile 3 months across commodities and cryptocurrencies. Global stocks made fairly steady gains. Let's get into what we have so far with our Danny Berger. Danny, it's actually been a pretty good quarter overall.
Yeah, definitely. A lot of volatility under the surface, as you say. A lot of violent rotations, but still, with 1 day left to go, we are headed for one of the best first halves since 1998. Only 2019 would have beat it in those past few years. But it's interesting to see how this end to the first half of the year, rather, is shaping up and what clues that gives us for the second half. For one, today, even though the market's pretty red, we have a quarter end, a month end rebalancing effect. It is growth that has taken up the leadership mantle. And it's really easy to say, okay, now is the time to be worried about valuations. But if you've been worried about that at all over the past decade, you would have been wrong. And it's important in that context that we get the new call from Tom Lee over at Fundstrat, always a very bullish voice. He's come out of the gate with a 4,600 call on the S&P 500. This is a new street high. It matches Jonathan Golub over at Credit Suisse. Both of of them arguing that the market is really strong. Tom Lee says there's momentum not just in the economy, but in the market. Of course, as we look forward to the second half, a big risk that Lee points out is the Delta variant. But he says so far it hasn't induced enough lockdowns to really take the power out of this rally for the S&P 500. So it's interesting to see, Kaylee, despite the fact we ended yesterday on all-time highs, we're going to have this great end to the first half of the year, that there are still voices out there and strategists frantically trying to upgrade their estimates for where we go from here.
Always playing catch up. Bloomberg's Danny Berger, thank you so much. Meanwhile, shares of Moderna are also at record highs after the company said its vaccine produced protective antibodies against the more contagious Delta variant of COVID-19. Eric Fanner, who leads European consumer news for Bloomberg, joins us now. Eric, is this also a case, as we've seen with other vaccines like Pfizer's, for example, where it does protect you, but only after you've had both shots?
Well, that's right. We'll have to see that still in the follow-up real-world results. As you said, with the other vaccines, with Pfizer, AstraZeneca, we've seen that they protect well against, or pretty well against Delta after 2 shots, less well after 1 shot. These results are in the lab with Moderna, so we'll have to see how it does in the real world. Given that it's an mRNA vaccine that's similar to the Pfizer one, you'd think it might have similar results to Pfizer, which has done pretty well in the real world.
Yeah, I saw a couple of tests, a couple of trials, I should say, for Pfizer that shows it's 88% effective against severe disease and death, 96% effective against hospitalizations, and I'm talking about the Delta, against the Delta variant. So Pfizer checks those boxes as well, but it hasn't done nearly as well in terms of the stock as Moderna. Why is Moderna outperforming all of its competitors in the markets?
Well, Moderna as a biotech that has this one product that, is focused on COVID is going to be more, more exposed than Pfizer, which is obviously a much more diversified company. So they'll benefit more directly. You'll see more volatility in those shares. And, a lot of optimism about this now. And that kind of, it also speaks to the concern about Delta kind of broadly as it starts to spread, more widely in the U.S. and parts of Europe, beyond the U.K., where it had already spread quite widely. Clearly a market for this vaccine.
All right, Bloomberg's Eric Fanner, thank you so much. And Eric teed me up perfectly for a check now of some stocks moving in pre-market trading in the U.S. because Moderna is higher again, but also another vaccine maker is getting a boost today. CureVac up 2.2% after already rallying 12% in the last 4 sessions. Investors may be now having a little bit more faith in its own mRNA vaccine. Another stock moving to the upside is Virgin Galactic, ticker SPACE. Of course, Richard Branson's commercial space exploration company. It fell more than 14% in yesterday's session, but maybe a little bit of dip buying happening this morning, up about 1.5% in early hours. And finally, another stock to note is Xilinx. This is related to a deal. The UK yesterday clearing the way for AMD to buy the company. Of course, that merger has already gotten clearance in the US and South Korea. We are expecting the EU to make its ruling by today, so we'll watch out for that news. But at the moment, Francine, that stock up about 2.6% before the bell.
Yeah, a lot to talk about. Xilinx, one that I hadn't followed as closely. Thank you, Kaylee. Coming up, Matt Maley, Miller Tabak Chief Market Strategist. We'll talk, of course, about the end of the quarter. We'll talk about inflation. We'll talk about cyclicals down. And then later on, Noubar Afeyan, Moderna co-founder and chairman. He's part of the Bloomberg New Economy Catalyst event, which is underway. You can watch it at LiveGo on the Bloomberg terminal. We'll talk to him about vaccinations and variants. This is Bloomberg.
Even more weight to the fact that our nation needs to be playing.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It would have to come back very quick. The unemployment rate would have to drop fairly substantially, or inflation would have to really continue at a very high rate before we would, take seriously a rate hike in 2022. But I'm not ruling it out.
Federal Reserve Governor Christopher Waller there speaking in an exclusive interview with Bloomberg's Kathleen Hayes yesterday. I want to take a quick look at what the forecasts are now for GDP and inflation growth. Just this year, they've climbed so quickly. We're now looking at, and I'll welcome our listeners on London DAB radio as I do every day at this hour. I'm always reminded that radio listeners cannot see the chart, so I'll walk you through what we have here. In white, GDP expectations just climbing higher and higher. Now, a survey of economists done by Bloomberg shows a 6.6% increase is expected by the end of the year. In terms of core CPI, a 3.5% climb is expected for the end of the year. So inflation and growth expected to be very strong. Miller Tabak's chief market strategist, Matt Maley, joins us now to talk a little about this and what we're seeing in markets. Matt, what do you think of the increasing talk from Fed officials that they're going to need to taper sooner than later and maybe even raise rates at the end of 2022?
Yeah, I definitely think this is something that has to take place, to be honest with you. I mean, they're trying to do it. They do send out some conflicting signals between some of the different members of the FOMC. But that's kind of what they did in 2013 because they don't want this taper to become a tantrum. In other words, for it to be priced in all at once. They want it to be gradual. But for them I actually would say it'd be irresponsible if they didn't, unless this Delta variant really becomes a serious issue and really shuts down things in a much more major way than it has so far. But you look at it, I mean, this massive emergency level of stimulus was put on last March of 2020, because we had an emergency in the economy. It was completely shutting down. We had an emergency in the markets, especially in the fixed income markets, which had frozen up, and completely, an emergency situation in employment. Well, now we don't have an emergency situation in any of those, so we no longer need emergency levels of liquidity. They need to try to cut it down, and that's why I worry about that. We're going to create headwinds later this year.
But Matt, what would the biggest policy mistake actually look like? So would it be the Fed tapering too soon, or the Fed actually keeping it for too long? So what's the lesser of two evils?
Yeah, I think waiting the lesser of two evils for the markets, of course, is going to be if they taper too soon. But for the overall economy, and I think for the long-term view for the markets, because once it becomes evident they are going to taper, the stock market should pull back. But corrections are normal and they're healthy. It wouldn't be the worst thing in the world. So to be honest with you, I think on a longer-term basis, the lesser of two evils is if they go too soon. Again, if the Delta variant becomes a big issue, that's a problem. Right. But I just think that they can't wait any longer.
So, Matt, you have the Fed, you have the Delta variant, and BlackRock also putting out a note yesterday that you also have potentially higher taxes and more regulation coming down the pike, and therefore it may be time to turn away from U.S. equities. Do you agree?
Yeah, yes, to a degree, but again, it's not that to taper back. I said we'll taper back on the bond purchases. Let's taper back on our purchases of U.S. stocks. But I don't think this is going to be suddenly we're going to turn to a major bear market. You need to walk away. But we do have certain areas of the world that are doing better. I mean, look at the emerging markets thing, which are trying to really try to bounce back in a more significant way than it has in the past. And the one, of course, the issue I worry about there is with the dollar, because the dollar is inching a little bit higher again. I mean, everybody's been saying, if you're looking about a really crowded trade recently, at least in the way that people are talking, is they expect the dollar to go a lot lower. But it has been trying to rally. And if it makes a new high for its recent move, that's going to scare a lot of people, and it's going to cause the emerging markets to hit. But
well, as Kaylee told us earlier, it looks like the best month for the dollar since May of 2020, I believe she said. It's also been a good month for bonds. I mean, the 10-year yield is now down at 146, Matt. And if we're looking more hawkish from a Fed standpoint, why are we seeing rates continue to track lower and lower?
Well, I mean, one of the things is that, again, they are lower, but they're still a lot higher than they were, last August, last summer, basically this time last summer. And part of the reason is technical in nature. The bond market had gotten ridiculously oversold, which means yields got way overbought, and then they've come down over the last three months or so. I tell you, if we get a much stronger than expected number on Friday, those rates are going to jump back up. So I think that we're seeing. I don't think rates can go a whole lot lower from here, at least over this summer. And the line of least resistance is higher for interest rates, and that's good for for us to revert back to that value trade rather than the growth trade.
Matt, thanks so much. Matt Maley there, Chief Market Strategist at Miller Tabak. Now, coming up on Balance of Power, an exclusive conversation with the Dallas Fed President, Robert Kaplan. It seems that every day there's a new Fed governor, which is great insight into the markets and inflation forecast. That's at 12 p.m. in New York, 5 p.m. in London, and this is Bloomberg.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua in London and Matt Miller in Berlin. Now let's get the first word news. And the British government has revealed its post-Brexit system for overseeing subsidies to companies. It's promising to make quicker decisions than when the country was in the European Union. Subsidies will be allowed if they follow certain principles, like benefiting local communities and being good value for the taxpayers. In North Korea, Kim Jong-un says a grave situation stemming from quarantine negligence has created a crisis. Kim hinted at coronavirus risks that could affect his rule. The regime has long denied that North Korea has had any infections. State-run media isn't providing any details. Of course, North Korea has taken drastic quarantine steps that have made its economic crisis even worse. SpaceX founder Elon Musk is unhappy about rules that forced a scheduled launch to be scrubbed in Florida. The mission was delayed after an aircraft entered the so-called keep-out zone around the launch site. Musk calls the restricted area unreasonably gigantic and says the current regulatory system is broken. The FAA says the system worked and kept people safe. And a big foul up in the vote counting in the race for mayor right here in New York City. The Board of Elections took down previously reported results in the Democratic primary after mistakenly counting test ballots. That produced about 135,000 dummy ballots that skewed the results. The inaccurate count showed Brooklyn Borough President Eric Adams losing a large part of his lead over former city sanitation commissioner Catherine Garcia. And of course, even when the correct results are reported, it will not certify a winner. That won't happen until all the absentee ballots are counted, Matt. But still not a great start to that ranked ballot system.
This cannot improve voter confidence in the system. I mean, who said, listen, let's make it more complicated and let's let it drag out for months, right? And possibly make a huge mistake. Why do that?
Yeah, I mean, I'm sure they didn't do it on purpose, but certainly this is a major blunder. And, you know, in London, when we elected a mayor, we found out quicker. I have to say, for New York City, and also, you know, one of the greatest cities in, like, the beacon of democracy in the Western world, it's pretty unfathomable, actually.
Yeah.
Embarrassing.
Yeah.
Truly embarrassing.
Not great. Not great. But the Board of Elections will correct it at some point today, so we will look out for that.
The Board of Corrections as well.
Freudian slip.
Yeah, we need a border correction. Coming up next, Noubar Afeyan, Moderna co-founder and chairman. He's one of the 31 innovators taking part in the Bloomberg New Economy Catalyst event. We'll ask him about vaccines. We'll ask him also about his share price. This is Bloomberg.
morning was a bit of a historic day. It was the first time Indigenous designers showcased at Australian Fashion Week, and it was a full house of all Indigenous talent.
It made me so proud. Absolutely beautifully done. I mean, the designers, the pieces on there, I think just about every model or every second model was like, oh, I want that, I want that. So each of my pieces, we have our signature prints, which are each tell a story and is definitely a contemporary way of experiencing Aboriginal culture. And And then each of my pieces are named after, inspiring Aboriginal and Torres Strait Islander women. So when the customer buys something, they're learning about the story, they're learning about women. I would hope that it isn't tokenistic, and I would hope that it's not done to tick a box. And so, those things you have to be mindful about that. But I think it's incredible what's been achieved so far, but, there's always room for growth. I think the elevation of Aboriginal and Torres Strait Islander people in these spaces, it's long overdue, and it's a really powerful and incredible time, I think, and to be a part of that is really special.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Francine Lachman in London, Matt Miller in Berlin, Katie Lyons in New York. Now, if you look at the markets, Matt, they're pretty quiet. There's not a real catalyst today, but we kind of take stock of the next quarter. We look at some of the cyclical
Did you say catalyst on purpose?
As well. I did. You see that?
Well, because the Catalyst Conference has kicked off today, and I'll be watching very closely because we really have a great collection of the smartest innovators in the world. For example, Sam Bankman-Fried is a speaker at, is a catalyst this year, and he is, a 29-year-old who's earned a cool $40 billion, and he intends to give it all away. So you've got a lot of these people who have ideas that will change the world, most likely, and for good. So I'm pretty excited to watch the rest of the Catalyst Conference.
Yeah, me too. A catalyst for change. That's a new, on Twitter and Instagram. What would you do? Catalyst for change. Kaylee, what are you seeing in the markets?
Well, of course, it is the Catalyst event today, Francine, but it is also the last day of the second quarter and the first half of the year. And I will say, for the last day of the quarter, it isn't the best, actually, last day of the quarter, because we are seeing the losses grow as the session grows older in Europe. Right now, the Stock 600 down basically a full percentage point. And here in the U.S., after being in positive territory earlier, futures are pointing to a lower open. We're now down about 10 points or so on S&P 500 futures. Of course, that is after the index eked out a record high yesterday. In the bond market, yields are moving lower. We're looking at a 146 on the 10-year. And then I also wanted to point to gold. Futures lower again by about 0.3% today. Gold actually heading for its worst month since November of 2016. Of course, part of that has to do with the Fed. Part of it, the stronger dollar that we have seen today and really over the course of the month, which is the best in more than a year for the dollar. Of course, digital down is moving to the downside as well today. Bitcoin below $35,000. That is dragging on some crypto-related stocks in pre-market trading. You have Riot Blockchain and Coinbase each down more than 3%. Two stocks moving to the upside, though, relate to COVID-19 vaccines. Makers of those vaccines getting a bit of a lift as concerns grow about the Delta variant. CureVac up 2.3%. And, of course, Moderna yesterday saying its vaccine is effective in producing antibodies against that variant. It hit a record high on that yesterday, and those gains continue today. That stock up about 0.7%, Francine.
Kaylee, so as we were saying, Bloomberg New Economy has selected 31 people to be part of an inaugural group of catalysts. Now, this group of scientists, researchers, entrepreneurs, and policymakers are helping to solve society's biggest challenges, including climate change, food security, and chronic health disparities. Moderna co-founder and chairman Noubar Afeyan is one of these innovative individuals leading the way out of the pandemic, and he joins us now. Noubar, as always, thank you so much for coming on. You make us smarter, of course, on how we should look at the variants and the vaccinations. Now, today, the share price of Moderna also at a record high, as Moderna says that it is efficient against all of these variants. What can you tell us about how worried you are about the Delta variant really ripping through our economies?
Well, Francine, thanks for having me. The Delta variant is part of a series of mutations that the virus is presenting as it tries to escape the human system trying to fight it back. And it's a natural process, but it is concerning in the sense that we don't really know where these variants are going to go, and we have to stay vigilant. What we are doing on the vaccine side is to test all known variants against the vaccine and the immune response that we see to the vaccine. And indeed, yesterday, we presented data that indicates that at least the Delta variant is covered. But we do have to be very, very careful because we just can't anticipate fully what's next, and we have to keep testing, and if needed, adjusting the vaccines over time to be able to also protect against new threats.
Noubar, is there a mix that right now works even better than some of the trials we've had on? So if you have an old school vaccination for your first shot and then a second one that's mRNA, does that give you more protection?
I have to be careful because I know that throughout the world, lots of people are experimenting with this by virtue of guidance that's being issued, warning against some vaccines, and so people are basically switching to take another one. There aren't controlled studies yet that adequately prove out that that is a way to go. Empirically, kind of anecdotally, it seems as though a second shot with the mRNA is providing a boost of the immune system, in some cases significant. And so I think we're doing the studies, the health authorities are doing studies, but definitely it is the case that a second booster shot, regardless, will be important because we really do need to protect not against just the parent initial strains, but also the variants, as were mentioned. And these variants are generally appearing because they have some advantage over the previous ones. And so continued vigilance, continuous testing, and definitely we need to get definitive answers to these.
Are we vigilant enough also for people that have been double vaccinated? So what do we know about how we could actually still pass on, COVID-19, even if we've been vaccinated twice?
Well, that's another interesting frontier that's emerging because a lot of data is being gathered now about how durable our immune response is. I think your audience will have seen a couple of days ago, there were reports of some encouraging kind of durability data in terms of how our immune systems are continuing to make B cells that are essentially continuing to survey and to be able to counteract antigens or the virus, let's say. So on the one hand, we're studying that, but on the other hand, we are seeing reports coming out of antibody levels diminishing over time. And what's not clear is how much of a diminution in that level will expose us to the variants, let alone to the parent strain, and over what period of time. So it really is a complex picture. We want to make it very simple because obviously, in any way you look at it, getting vaccinated, getting protected is the right thing to do. But then as we go to the next few months or even year, we're going to have to start doing additional measurements, perhaps even in people, to make sure that we have a handle on who might be the most vulnerable and who might need an additional booster shot. Again, early to tell, studies being done, but I definitely think we can't just put our guards down.
So bottom line is, if you get both shots after a couple of weeks, you're extremely unlikely to catch it. So you're extremely unlikely to pass it on as well. Anything's possible, of course. But you're saying we may need a booster eventually to keep that high level of efficacy against alpha, beta, delta, what have you.
And many others, epsilons and others that are coming down the path. That's exactly right. And I think what we need to do, though, taking lessons from the last year and a half, is that we cannot go back into a reactive mode. We've been gaining an advantage over this virus that really is kind of gunning for our immune system constantly by being proactive, by being preventive, not just reactive. And I think we can't get to a point where we wait for another set of variants to really do damage and then start saying, okay, now what do we do? We can't afford the last year and a half all over again.
I wonder about the evolution of this virus. In the past, when we look at historic examples like the Spanish flu, these viruses eventually become less fatal and turn into what we now know of as, the flu, which most people have gotten and very, relatively few people die from. Is that likely to happen with this COVID virus, or is it possible that it mutates into something even more fatal?
Well, if it mutates into anything more dangerous, we will certainly counteract it with vaccines that are more specific continuously until it ends up in the fate that you're describing, which is most likely that enough variants make it out there that they persist but at a kind of a containable way, say an endemic version of the virus. And that is while it's still speculation, that is the expectation that we most hear by folks that are experts in these kinds of evolutionary trajectories. So, but in fact, it could along the way get spikes of things that concern us, and we need to be able to react to them. The good news is that the mRNA technology is poised to be able to react. It's not as though if something really bad starts appearing, it's going to have to take us years and years to react. We showed already we could do this in months. We could do it again, even in a shorter period of time, if we all stay vigilant and coordinated.
Nubar, I'm in the fortunate position of being fully vaccinated, as are Matt and Francine, and we all live in developed Western countries. The picture is very different in much of the developing world. Before we start talking about giving booster shots to those in the West, should we be more focused on making sure everyone in the other parts of the world that are less fortunate actually can get inoculated first?
I think we should do both. I think we can do both, and I think it's going to require a lot of coordination and collaboration. One of the things that we saw last year was that there was a huge amount of disorganization as to what the needs were, who was willing to commit to being able to secure supplies until it was way too late. At some point, the supplies that Moderna could produce, Pfizer, others, were far exceeded by emergency demand. And at that point, there's not much you can do about it. What you can do is to, in advance, plan. Next year, we expect billions, probably north of 10 billion doses of vaccine being produced. How we deploy that certainly is up to the health authorities and the governments to coordinate, but I absolutely am in the camp of those who recognize that just by taking care of this in a few locations in the developed world will not adequately deal with this threat. So we really do need to, as we are seeing the US, EU, other countries step in, help provide supplies in a timely way, and as we ramp up even more, do so even more. We entered into a relationship with COVAX a month ago. We're looking to expand that over the next few months. We'll do our part. Moderna will produce 3 billion doses next year, but it's all about getting ahead of this as opposed to reacting, including with demand, with supply coordination.
Yeah, especially for the next pandemic. Nubar, thank you so much. Nubar Afeyan stays with us. He's part of the Bloomberg New Economy Catalyst event, which is underway. You can watch that on LiveGo on the Bloomberg terminal. And as Nubar was saying, we'll ask him a little bit more about his fund, health security, and preemptive medicine. This is Bloomberg.
Yeah, no, thank you so much for having me, first of all, Jen. Good to be here. So, I think the biggest problem we are trying to solve is one of energy access. So, 600 million Africans lack access.
Surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg Surveillance Early Edition. I'm Francine Lachman in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now we're back with Noubar Afeyan, Moderna co-founder and chairman. He's also founder and chief executive of Flagship Pioneering, which is, of course, the mother company for a lot of these other companies. Noubar, thank you so much for sticking around. I know we were having a great conversation about the Delta variant's COVID-19, but also the fact that you think there needs to be a general rethink on how we approach health. You want to really focus on preparedness for the next pandemic, health security, and preemptive medicine. Why are we not thinking like that now?
I mean, historically, our healthcare system has focused on, ironically, the opposite, which is sick care. And while that's where the need is the greatest and that's where the suffering is the greatest, I think we're increasingly realizing that both the cost and the effectiveness of only focusing on disease is quite prohibitive. And so the only place to go really is upstream of disease. And with the modern technology and science, we're learning that long before we have diagnosable disease, we have measurable activities, actions that go on in our bodies and our various tissues that actually can be intervened with. And I think this is something that there really is no way to do today. The regulations, the way the medical world works, this is very different. Of course, we all know that there are prevention steps that we could take. That's what global health's about. But what we've just seen is that too is something that leaves us completely exposed to infectious diseases. We really need to rethink of focusing on pre-diseases and treating that as opposed to waiting for disease to be advanced.
Noubar, I guess the biggest holdup to that is spending a lot of money on someone who may not be sick, who could be sick. So is this up to governments to try and figure out a way to make that viable?
I think governments and the private sector have to collaborate. The private sector will make the innovations that indicate that this is even feasible. Because you're right, if all you're doing is a risk play where somebody is a 2% risk and now we're going to spend money on them, it's a very different thing when you're way down a path where not only is it almost inevitable that you're going to end up in a disease condition, but we can actually reverse it or we can delay it. So I wouldn't view the world as you're well until you're sick, and in between it's a guessing game. That's where scientific advances, technological advances make a big difference, so we can pick out early pre-diseases from late pre-diseases. Late pre-diseases are where it's getting too late to start really having a meaningful effect. So I just think we have to move the goalpost way up in our thinking. And of course, we're not going to treat healthy, quote, people, but I think we're erroneously deeming certain people healthy the way we're doing it now.
Well, in so many cases, also prevention is so much less expensive than treatment. Obviously, that certainly would have been the case in terms of COVID. Let me ask you about Alzheimer's, because there's been so much focus on that lately. Are you saying that it's more likely we find a way to prevent Alzheimer's than a way to treat someone who's already gotten Alzheimer's?
I think the science generally is pointing to the fact that very early detection of markers, and that's what the whole controversy has been about of late, because the advent of these markers that indicate from blood, that indicate the early onset, and our ability to test interventions to that is a whole new frontier. It's never been tried. We know the opposite doesn't work, in that going into such a complex neurodegenerative condition with some magic bullet drug has not worked over and over again. So upstream, there's certainly hope, and we and others, and certainly we've seen some developments, are working on those things. So I definitely think that this is something that will be ahead for us, and there's lots of encouraging signs, but it's not a panacea. You know, prevent is a tough word. Let me say delay and deter, and even sometimes redirect the disease into slightly less pathogenic conditions. All of that is possible in the different conditions we're looking at.
Noubar, you recently also, raised capital, and I think you are now sitting on $3.4 billion of capital to drive more breakthroughs. What are the two top priorities for Flagship?
Well, one of them is, in fact, to really work collaboratively on this whole notion of preemptive medicine and to launch a number of detection, in some cases pandemic-oriented surveillance technologies that can put us in a better position to act much before the need is urgent and desperate. So I think that's an area that we're focusing very much on. We have some very exciting things that are going on in broadly the category of programmable medicines. If you look at mRNA that we've just seen now catch a lot of people's imagination, not just with COVID, but in many disease conditions, mRNA is part of a family of medicines we envision and are developing broadly across the flagship pioneering ecosystem, which all fall under the category of having the properties of being programmable. These are code molecules. You give one, if it's working, you can switch the code and you get many other forms going after different diseases. So those are a couple of the exciting new areas.
Fabulous. Thank you so much for your generous amount of time. Noubar Afeyan there, Moderna co-founder and chairman. He's also part of the Bloomberg New Economy Catalyst event, which is underway. Right now, Bloomberg's Jess Shankelman, I think, was asking some questions about also some of greening the economy. Our very own Anna Edwards actually now on stage. You can watch the full event at LiveGo on the Bloomberg terminal. This is Bloomberg.
Co-founder and CEO of Bluefin Technologies, is working on robots that vacuum up plastics and other pollutants floating on the surface of our waterways.
G7 today need to wake up and listen to the science. There isn't room for discussion on this. Scientific inevitability, and they need to act. They don't need to talk anymore. They need to just act.
Climate change has been on the agenda of the G7 since maybe 2003. So we need to see action, not just talk. And we've only got 9 years left to halve carbon emissions if we're going to stop dangerous climate change happening.
United, we'll never be defeated! All the world is possible!
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
If you own something good, hold it for a long period of time. So to me, find those right neighborhoods to invest in, deploy your capital, and then be patient.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lackwin, London, Matt Miller in Berlin, Katie Lyons in New York. The one and only Tom Keene, co-anchor of Bloomberg Surveillance, also now joins us. And Tom, I mean, we saw the headlines. I mean, the latest in the NYC mayoral race is actually they need to recount. Like, what's going on?
Well, what's going on is simple. What's going on, many people thought would happen. This is a board of elections. It's had some challenges going back 10, 20, 40, 100 years. And they had challenges yesterday with a miscount. That's the old news, Francine. The real news today is the reforming of what's next. And that's not only the ranked choice voting and the recalculation. We will see that next round today. We'll have that information. Yeah. But Francine, what I'm really going to focus on with Shelley Banjo later this morning, our New York bureau chief, are the absentee ballots. About 140,000 absentee ballots need to be counted, and there's a ginormous mystery to how that will shift this mayor's race.
Yeah, it is, and we'll, of course, try and keep on top of this mystery to bring you the latest headlines. Tom, it's the end of the quarter. It is tomorrow, technically, but I know you'll have a full roundup of that. What's your chart of the day?
Well, my trade of the day is to get through the end of the quarter. That's what we're trying to do right now. The heat here is 92. I don't know what that is in Celsius. Matt Miller will have to translate that for you. But it's been an extraordinary first half. Ben Laidler of eToro, many other optimists, David Kostin at Goldman Sachs, have absolutely nailed this first half. Up, biggest up in 9 years, I guess is the way to put it. We've got a wonderful set of guests joining us, including Lauren Sauer at Johns Hopkins, moving on in her medical career. We're thrilled to catch up with her on the seriousness of the pandemic.
33.33 degrees actually Celsius
Very
is
nice.
what I see as 92. By the way, in the age of Bitcoin, Tom, I could send you in an instant an exact amount of money and directly to you from me. I don't understand why we need to take 12 weeks to figure out with this confusing ranked choice voting who the mayor of New York is. Why can't we do a better job?
It's been tested, and what we're dealing with here is a bigger platform, the huge size of New York City, the 5 boroughs. And also, Matt, I think it's just the fractious nature of New York City politics. There's been a lot of other tests among maybe a more smoother milieu, if you will. And all of a sudden, it's the rough and tumble of New York City. And as we've learned in the last 12 hours, it's not going well.
Yeah, it hasn't. Have you seen how Tom and Miller actually have some kind of bow tie coordination like Prince George? It's all because of the football yesterday. There you go. Great job. Like, you could go to a wedding together. Tom Keene, co-anchor of Bloomberg Surveillance.
Harry Kane story. I teared up.
Yeah, I mean, the wave actually of Prince George was what did it for me. Let's look at what else we're watching today. Kaylee, you're all over the eco data in the U.S.
Yep, ADP print coming at 8:15 Eastern time. Very important read on private hiring ahead of the jobs report on Friday. Economists looking for a 600,000 print. Would be a downshift from May, but still watch out for that in about 2 hours and 20 minutes time, Matt.
I'm watching Starlink. It's about to go live. Elon Musk said they've reached the magic number of users. They have 69,420 people signed up. I believe that was that number was quoted in jest. But we're also watching for a SpaceX launch that got scrubbed because a helicopter took off in the area, and Musk wants the FAA to change the rules for safety as well.
Yeah, I'm looking at OPEC Plus actually delaying some of the preliminary talks to make sure that possibly they could have an agreement. So watch out for any news from some of the oil ministers. Now, our coverage of Bloomberg New Economy Catalyst also continues. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may
be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
There's clearly a sense of optimism and enthusiasm out there just given the strength of the market.
We should anticipate that we can get back to that pre-COVID labor market.
As the countries move out of the COVID, their demand for basic raw materials is going to be very, very strong.
As this global recovery is unfolding, investors need to think more global in their portfolios as well.
Valuations are very, very challenged, though, but the fundamentals are going to keep getting better here.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Wrapping up the second quarter from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures down 7 on the S&P. We're negative a little more than 0.1%. Closing out June potentially, Tom, most likely with a 5th straight month of gains.
It is. It's an extraordinary second half. And, of course, June looking well. The rally yesterday, really in the last half hour, John, really caught my attention, even with the futures now negative. John, what I'm going to notice here is let's go right back to the vanilla spread. You've been talking with Lisa about a flatter yield curve. Well, I'm sorry, it's ever flatter. We're not due to 117 basis points on the 210 spread, but this is a huge signal of what's to come. This flatter curve, John, to me is a huge surprise.
This has been the thing for me at the end of 2Q. This last month, Tom, break-evens topped out in May. As you point out, the yield curve is flatter, it's not steeper. And when you look at the performance of this equity market, NASDAQ 100 up 6% over the last month. Big banks, the S&P 500 sector, that is down 6% over the last month. That's quite a divergence.
Yeah, and we enter 4th of July weekend with the real yield. Look for that Friday afternoon after the jobs report.
Thank you, TK.
10-year real yield negative 0.89%. It hasn't budged in any way, shape, or form. And away from the equity market enthusiasm, John, this fixed income space is something we can talk about this morning.
So, Lisa, we have to play the what next. Here's the quote from Peter Cheer over at Academy. Take some gains, reduce risk, and enjoy a few weeks with less stress.
I can endorse that. I don't know if I necessarily would take the chips off the table, but definitely less stress and take some time off. There is a question I heard in a number of different analyst reports, buckle up, buckle up, buckle up, buckle up. But we're not seeing any potential volatility being implied into spreads when you look at the Bank of America Merrill Lynch Move Index or the VIX. And I do wonder what's going to be the catalyst, John, because honestly, the Federal Reserve, the main core of the Fed, has really doubled down on the transitory message.
Well, let's talk about credit spreads, Lisa. A couple of weeks ago, you had just a mini stress test for this market with a Federal Reserve decision. What did credit do?
Tightened.
Not much, right?
Yeah, absolutely nothing. I mean,
Rock
honestly,
solid, resilient.
And the bottom line is this: if companies can access funding, what's going to stop this cycle?
Can I mention something, John? I think it's going to be the theme for the second half.
Yeah.
real wages are flat on their back. Lisa Bramowitz put a chart out on Twitter. I followed up with another chart. We don't need to go into the details now, John, but inflation-adjusted wages are a disaster.
We'll go into the details in just a moment, Tom. Here's the price action this Wednesday morning. Good morning to you all. Equity futures down 6 on the S&P, 22.77 on the S&P 500. A very small breach of 4,300 on the S&P 500 in yesterday's session. 145.61 on 10s. Yields come in around about a basis point, and in foreign exchange, the euro south of 120, 118.92. Lisa, unchanged on the day.
Yeah, and no matter what data we get, it seems like the pressure is lower these days for the 10-year yield. And that, to me, is the story of the second quarter of the year. This today, that's where we're at. We're a Wednesday. Happy Wednesday. 8:15 a.m., we get the ADP employment change. Not necessarily that predictive of what we can expect for the jobs report, but we're expecting less of a gain. 600,000 added jobs with particular focus in the service sector, particular leisure and hospitality. This is down from 978,000 in the previous read. How much does this foretell perhaps a weaker than expected jobs report on Friday? Again, not typically that predictive. 10 a.m. U.S. May pending home sales. The expectation is for a slight decline after yesterday we saw home prices rise the most in 30 years. This is creating affordability issues and also inventory issues. Just are not the homes to necessarily buy, which is the reason why people are expecting a slowdown in the pace of sales. And then today the OECD is meeting to talk about that global minimum tax, at least 15%. The expectation is by implementing this minimum tax, it could help countries raise more than $150 billion. Again, I wonder how big of a shift this is going to be. This is directed at the likes of Ireland. How much pushback are they going to make? What kind of loopholes are they going to close? And what is the time frame ahead of the G20 meeting next month? What is the time frame in terms of implementing this, John?
Lisa, you mentioned home prices. The fastest home price growth in America in more than 3 decades. Governor Waller had this to say in an interview with Bloomberg yesterday afternoon. I am much more sympathetic to tapering MBS first. Lisa, you've talked about this. Is the pressure building?
Yes. Well, here's the question. Again, does the Fed's Waller matter? And we talked about this because we've been talking about how the top 3 members, the ones who set the tone. And the issue is if they start tapering the mortgage purchases, that signals a rate hike. That signals to markets we're tightening. And does the Fed want to get on board with that? It might seem to make sense to tailor it. However, it is not so surgical when it comes to the Fed balance sheet.
What do you think, TK? Is this housing market in America getting a little bit too hot?
It's too hot, but it's also very segmented. I think there's been some very good reporting on it. What I'm going to tell you, John, is it's 900 miles from Spokane, Washington to Washington, D.C. I thought Zero Edge did a tour de force job yesterday afternoon showing the rent dynamics of San Francisco, yes, plunging, now in recovery, versus cities like Spokane, Washington. John, this is in western Washington towards Montana. I know you're unfamiliar with the map. And within Spokane, Washington, rents never really went down, and now they're going up. And I think
I love how you do
this. This mid-city story like Spokane, Washington.
Thanks.
You know, it's like a huge deal. Rents are going up.
Have you ever been?
No, I have.
There we go.
No.
At least we've both got that in common. Andrew Hollenhorst joining us now, City Chief U.S. economist.
They have wheat.
Andrew, let's just start with this one right here. The housing market in America. Do you think the numbers that we're seeing at the moment should influence the Fed's next move?
I think it has to be something that the Fed is thinking about now. I mean, you look at mortgage rates that are at record lows, you look at house prices that are rising at record fast rates, and then you look at the Fed buying $40 billion of mortgage-backed securities a month, and I think that there's a reason that those mortgage purchases were started. I think the reason for continuing them is becoming a bit more challenged. Now, that's not to say that they need to move immediately towards a taper, but I think when you hear people like Waller talking about, should we be looking at this? Should we be thinking about this? Certainly something you should be thinking about here.
Andrew, I want you to talk about the partitions of America and what it means in the second half for Jerome Powell. You look at real wages, and there's all sorts of nuances between first quartile and second and third quartile lower wages really doing poor. Or you've got the real estate we just mentioned, the difference between San Francisco and Spokane. Can the Fed aggregate this natural disaster of a pandemic, or are they going to focus on San Francisco or Spokane?
Yeah, I think you're getting at a really important point here, Tom, which is that, yes, we had a huge aggregate shock to the U.S. economy, but the way that this shock has transmitted itself throughout the economy has been very unequal across regions, across income groups. And then you think about what the Fed can do to address this. And the Fed really only has a few fairly blunt tools, right? You can raise or lower interest rates, you can buy or not assets. So when the Fed's looking at this, yes, you can think about trying to keep interest rates low, trying to hope that that boosts real wages at the bottom end of the spectrum. And to some extent, you are getting some nominal wage increases for lower wage jobs right now, which is a good thing. But the issue, which I think you're also pointing out, is prices are rising. And if prices are rising faster than wages are rising, then those nominal wage increases don't actually translate into real buying power.
Andrew, this goes to the heart of a conundrum. The Federal Reserve, people argue, has been actually exacerbating wealth inequality by bidding up the prices of assets and not necessarily having the same commensurate effect in the real economy as evidenced by what you were just talking about, the real wages. Do you think that at this point, by doubling down on easy money policies, that the Fed is exacerbating some of the higher prices, that higher inflation read, and not necessarily adding to the increases in wages that could offset that for the average American?
I think it's a risk that the Fed needs to be taking into account when they're setting policy. So, if you think about where we came from, and it really wasn't that long ago, 6 months ago, a year ago, when the economy was really deeply, deeply depressed due to the pandemic. So it made all the sense in the world to just talk about easy monetary policy, a long period of accommodation, and really if you think about the Fed's dual mandate, employment, inflation, and then you also think about financial stability concerns, the real concern should have been employment, and that should have been kind of the only concern. So I think that made a lot of sense. I think that the difficulty now is that the recovery has just been so much faster than many people thought it would be. Things have happened much, much more quickly. We've got into a tight labor market. We have wages and prices that are rising. So the Fed now needs to transition and think about risks of higher prices, higher inflation, as well as this kind of inequality issue with asset prices.
ADP report a little bit later this morning, the appetizer for payrolls on Friday, Andrew. What are you and the team looking for?
So we think payrolls will be strong this month. Have a base case forecast of 860,000, which would be, a strong reading. We've been averaging about 500,000 a month. And I think as long as we average somewhere around there, the Fed will still be happy with what we're seeing. We'll still be on course to taper. Of course, the big question in this jobs report is not so much what the headline jobs number is. Is the jobs market being held back by issues with demand, or is the jobs market being held back by issues with labor supply and labor shortages? And anecdotally, as well as in some of the data, that's increasingly what we're seeing now.
Andrew, good to see you. Andrew Hollenhorst there, the city chief, U.S. economist, the head of payrolls this coming Friday. Your estimate, 700,000. That's the median estimate in our Bloomberg survey. Just a quick question from me, guys. Did you have the man from Del Monte back in the day? Do you remember that, Lisa, the man from Del Monte?
No.
You should Google the man from Del Monte.
Doing it right now.
Just have a quick Google and have a look at the man from Del Monte. And then tell me what you think about the current outfit of Tom Keene.
It's
Summer Wednesday.
Right now. It's,
do you know the man from Del Monte is?
No,
Tom?
I have no idea.
Famous commercial about fruit
about
from the UK,
fruit.
a couple of decades ago.
Thank you.
The man from Del Monte says yes.
We got to give some love to 992. John, we got to give some love to.
Look at that, Lisa. Go on, TK. Go on,
we got to
carry
give
on.
some love to 99205, Spokane, Washington. You and I need to go out there. Great breakfast, whether it's Frank's Breakfast or Mary Lou's milk bottle. It's an iconic kind of architecture thing, John. I think a road trip's in order.
I'm told it's 2,500 miles away, Tom, not 900, like you said a little bit
No, to
earlier.
San Francisco.
Oh, okay.
From
900 miles from San Fran.
The real estate,
2.5 to DC.
John, I think this is a huge important. It's like the difference, John, between the real estate and the city and Notting Hill.
All I can
it's
say,
a huge disparity.
I would love to see the Google searches during the show.
The man
for
from
each
Del
of you.
Monte Spikes.
Yep, the Del Monte
Man from
Spikes.
Del Monte.
The distance from Spokane, Washington to New York
DC.
City. Yeah.
All of the above.
Yeah.
This is going to be a great show, isn't it? In the next hour, Jared Woodard of Bank of America is going to make it even better.
Is it up to 95 today?
Equity futures down 5 on the S&P, 42.76. And as TK points out, it is going to be a steamy one.
Yeah.
In New York
Who's
City.
England play next?
They play Ukraine, Tom.
Ukraine?
Yeah, big game. Big game coming up on Saturday. 42.77 on the S&P 500. Good morning to you all. This is Bloomberg.
England ties.
With the First Word News, I'm Ritika Gupta. In North Korea, Kim Jong-un says a grave situation stemming from quarantine negligence has created a crisis. Kim hinted at coronavirus risks that could affect his rule. The regime has long denied that North Korea has had any infections State-run media isn't providing any details. North Korea has taken drastic quarantine steps that have made its economic crisis worse. And a divided U.S. Supreme Court has refused to lift the federal moratorium on evictions during the pandemic. That will leave the ban in place until the end of July. The vote was 5-4. Justices rejected calls by landlords and real estate associations to block the moratorium while their challenge goes forward. The plaintiffs argued that the CDC exceeded its authority by imposing the ban. And a big foul-up in vote counting in the race for mayor of New York City. The city's Board of Elections took down previously reported results in the Democratic primary after mistakenly counting test ballots. That produced about 135,000 dummy ballots that skewed results. The inaccurate count showed Brooklyn Borough President Eric Adams losing a large part of his lead over former city sanitation commissioner Catherine Garcia. And SpaceX founder Elon Musk is unhappy about rules that forced a scheduled launch to be scrubbed in Florida. The mission was delayed after an aircraft entered the so-called keep-out zone around the launch site. Musk calls the restricted area unreasonably gigantic and says the current regulatory system is broken. The FAA says the system worked and kept people safe. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.